Good afternoon, everyone. How are you all? And welcome back to the channel. And first of all, just let me know everyone in the chat section कि my voice is clear to you and as well as the video is absolutely fine to everyone. Then I'll start with the class and tell me how your preparations are going on as well. Good afternoon, everyone. Good afternoon. Everything is good. My voice is clear as well as the video is absolutely fine to everyone. Yes. So as you all are aware that we have come up with this marathon series, and this marathon series we have all the subjects in this marathon session one by one. We are going to do that, and you have already covered your quant marathon series session and reasoning as well. English was cancelled, I guess, and today is the company law marathon session, right? And yeah. So tomorrow we are going to have tomorrow we are going to have our commerce and accounts class, and then after that costing, then management, economics, and the finance part. So how your preparations are going on? Tell me everyone. कैसा चल रहा है revision? So this is a kind of a revision session, right? We are going to discuss all the important questions of the company law, and we are going to cover 100 MCQs, right, in one go. So just have the patience and we will move smoothly and gradually. Okay, now the PDF of all the sessions you are going to get in the Telegram channel, and if you haven't joined it yet, you should do that because all the PDFs are going to be provided in that channel only, right? Okay, so we are going to start now, and I will look at the chat section as well frequently to know your answers are correct or not. So right now I am not getting anything in the chat section except for yes, because we haven't started our first question. So this is your first question now. This question says a private company cannot issue shares through what? Right issue, bonus issue, public offer, private placement. So you have to tell me the private company cannot issue shares through what? So it can issue shares through the right issue, and it also can issue shares through bonus issue, and it can also issue shares through private placement, but it can't go with public offer because it's a private company. So I can see everyone is correct here. Okay, so public offer will be the correct answer. That is option number C, and I can see everyone is correct. That's really good. Now this is the underlying provision. Public company may issue securities through public offer, private placement, right issue, and bonus issue. And don't worry if you don't know the answer of this question. Okay, we are going to discuss about the underlying provision as well, so you have to remember it throughout the session, right? That's why we are doing this revision series. And private company is going to issue shares through right issue and bonus issue and through private placement. It can't issue shares through the public offer. That is very logical, right? Okay, second question of the day. For dash companies, matters relating to issue and transfer of securities shall be administered by SEBI. So for which type of companies? Matter which relates to the issue and transfer of securities are going to be administered by SEBI. Listed companies, for companies intended to get themselves listed. C option says unlisted companies with net worth of greater than 500 crores, both A and B, both A and C, and F is all A, B, and C. What should be the correct answer here? Let me check the chat section, then I'll discuss with you. Okay, so most of you are correct. Yeah, that is both A and B. So for the listed companies plus those companies which intended to get themselves listed, for both of them, what happens? The matters which relate to the issue and transfer of securities is going to be administered by the SEBI. Let's look at the underlying provision. See, listed companies and the company who intend to get themselves listed, that will be handled or administered by the SEBI. But the matters related with the issue of the issue and transfer of securities, and the matter that relates with non-payment of dividend, only these two cases will be administered by the SEBI. All other matters will be handled by the MCA, or you can say central government, a registrar, or the tribunal. But for other companies, except for these companies, except for the listed companies and those companies which are intended to get themselves listed, apart from those companies, all other companies are going to be administered by the central government or registrar or the tribunal. Clear? Okay. Next question, question number 3. When a company is issuing securities through issuing house, the document issued by issuing house shall be deemed to be a prospectus of the company only if issuing house allots or offers to allot the securities within dash days of the agreement with the main company. So what the question is asking to you, the document through which issuing house is going to offer the shares of the main company to the public, within how many days this issuing house is going to offer these securities to the public? Within 15 days, within 30 days, within 2 months, within 6 months, within 1 year? Or let me check the chat section, and yes, everyone is correct. That is 6 months. I can see most of you are correct. Okay, in fact every one of you is correct. That's really good. So let's discuss about the underlying provision as well. So what happens, sometimes the main company don't issue share directly to the public. What it does, it goes through the issuing house to issue the shares to the public. So it just suppose we can take the example of IDBI Bank, right? This is the issuing house and this is the main company, and this main company wants to issue its shares to the public. So what it does, first of all, it hires the issuing house, that is this underwriter, and this main company offers shares to the IDBI Bank, and now IDBI Bank is going to offer these shares to the public. So in this case, whatever document this IDBI Bank is offering to the public, that document will be called as deemed to be a prospectus. What do we mean by deemed to be a prospectus? Deemed means it will be considered as the prospectus only. So all the provisions that applies to the original prospectus will be applied to the deemed prospectus as well, right? Okay. Now the holders of the company will be the security holders of the main company itself, right? Now what is the condition for this document to be called deemed prospectus? The document that IDBI Bank is issuing to the public so that the public can invest in the shares. This document will be called deemed prospectus only when this issuing house, in our case it was IDBI Bank, it allots or offers securities within 6 months of the agreement with the main company. So within the agreement between these two companies, within 6 months, this IDBI Bank has to offer these securities to the main public. Then it will be called the deemed prospectus. Then this document will be called the deemed prospectus. Now, or whole consideration is not received by the company. Suppose this main company has come into the agreement with the IDBI Bank, but this main company is not getting any consideration, before these shares are finally issued to the public, right? So this is also the condition. So the whole consideration is not received by the main company before the offer is made by the issuing house to the public. So if any one condition is satisfied, then we call this document the deemed prospectus. Clear? Now what is the effect of deemed prospectus? Obviously all the provisions, all the rules of the prospectus is going to be now applicable for the deemed prospectus as well. Next, let's move to the next question. No prospectus shall be valid if it is issued more than dash days after the date on which a copy is thereof is delivered to the registrar. So it is asking you the number of days till which this prospectus will be valid. Till 30 days, 60 days, 90 days, 120 days, 6 months. What should be the answer? You tell me. Let me check the chat section first of all, then I'll give you the answer. Okay, so I have started to get the answers, and yes, most of you are again correct. That is 90 days. I'm really proud of you all, right? So yes, prospectus is not going to be valid if it is issued more than 90 days after the date on which the copy of this is delivered to the registrar. Yes. So the date indicated in the prospectus shall be deemed to the date of its publication, and before issuing this prospectus to the public, what the company needs to do, it needs to file the copy of this prospectus to the ROC, that is Registrar of Companies, or you can also call it the Ministry of Corporate Affairs, right? And it should be signed by the director or proposed director. Now, this prospectus will not be valid after 90 days. So within 90 days, company has to issue this prospectus to the public. If after 90 days, this company issues this prospectus to the public, it will not be valid, right? Okay, next question. the grievances related to the dematerialization of securities by unlisted public company shall be submitted to whom? So you have some grievances related to the dematerialization, demat form of securities by the unlisted company. So to whom you are going to file your grievances? ROC, Tribunal, SEBI, Investor Education and Protection Fund. So let me check the chat section and then I'll tell you the answer. And yes, everyone is correct again, I think. Yeah, everyone is correct, whoever has given me the answer. The answer would be option number D, Investor Education and the Protection Fund Authority, IEPF. Now, next question. Every unlisted public company shall submit form PAS 6, that is Prospectus and Allotment of Securities, to the registrar within how many days duly certified by the company secretary in practice or chartered accountant in practice. So every unlisted company is going to do that, is going to fill this PAS 6 form to the registrar within how many days? 60 days from the conclusion of the each half year, 60 days from the conclusion of each 30 days. First option is 30 days, second option is 60 days from the conclusion of each half year, 30 days from the conclusion of each year. D option is 60 days from the conclusion of the each year. So let me check the chat section, then I'll give you the answer. And yes, everyone again, most of you are correct, not everyone right now, but most of you are correct. That is 60 days from the conclusion of each half year. So what happens? First of all, let's understand what is this PAS 6. So it talks about the reconciliation of share capital audit report. So basically, what's the opening balance of the share capital and what's the closing balance? So you are going to reconcile it. Suppose you have done some fresh issuance of shares, so you are going to add it in your share capital. And suppose you have bought back some shares, so you are going to minus it. So this is called reconciliation. So this is going to be submitted by the company, every unlisted companies, within 60 days from the conclusion of each half year. So after half year, within 2 months, the unlisted company has to file this reconciliation, that is PAS 6, to the registrar of companies, right? So this is about the PAS 6. Now, if any grievances is there, then it should be filed before the IEPF. Now, next question, which prospectus is an incomplete prospectus? So we have different type of prospectus like deemed prospectus, abridged prospectus, shelf prospectus, red herring prospectus. Which prospectus is called incomplete prospectus? So deemed prospectus, abridged, shelf or red herring. We will talk about each one of them, don't worry. But let me check the chat section who all of you are correct here. And yes, again everyone is correct. Not everyone, but most of you are correct. That will be 7th. Acha, now I am getting the answers of 7th. Yeah, everyone is correct. I can see everyone is correct. Yeah, good. That is red herring prospectus. Good. So what do we have in the deemed prospectus? See, we have talked about this. Whenever issuing house issues any types of shares or offers shares of the main company to the public, that document will be called deemed prospectus if certain conditions are satisfied. Easy enough. What is this abridged prospectus? So basically, abridged prospectus is filed with the application form. The summary of all the important points will be written in the abridged prospectus. What is this shelf prospectus? Shelf prospectus is a type of prospectus which you can issue multiple times within the year. Okay? And what about this red herring prospectus? It is a prospectus in which not all the details of the shares we are offering will be given. The quantum of the shares and the price will not be provided under red herring prospectus. Let's read about this. The red herring prospectus, a prospectus which does not include the complete particulars of the quantum of securities. So that means it is not giving the public how many securities, how many number of shares we are offering to you. It is not going to give that. First thing. Second thing, it is not going to give the price of the securities. So you might ask me, sir, how they are going to subscribe for the shares if you are not giving them the price, you are not giving them the number of shares by the bidding process. What happens in the red herring prospectus? Public bid for the shares. They bid according to their own analysis. Suppose person A is going to bid for 1000 shares and he says, I'm going to purchase these 1000 shares at a price of 100 rupees per share. Similarly, person B is going to do that, right? And similarly, the person C is going to do that. So in that sense, then company do the book building process, and after that what happens, it decides the price and the quantum of securities. It is called book building process. So it is about the red herring prospectus, right? Now question number 8, shelf prospectus shall be valid for a maximum period of what? 6 months, 9 months, next open issue of the same kind of shares 1 year. You give me the answer. Let me check the chat section till then. Yeah, I can see most of you are correct, but not everyone again. Okay, just wait for a minute. Yeah. Yes, I started to get the correct answers. Okay, good. So the answer would be 1 year, absolutely correct. Shelf prospectus, I have already given you the brief about it. The prospectus which is going to be used multiple times during the year, right? So suppose you have issued the shares, and for similar kind of shares you are going to use this shelf prospectus multiple time during the year. This is called shelf prospectus. Yes. Okay, so first file the shelf prospectus at the time of first offer of securities. Then after this first offering of shares, each time you are going to you are going to offer new shares, you have to file the information memorandum at the time of subsequent offer. So what is this information memorandum, and what it is going to consist of? So it is consist of the changes that has been there from the first time offer of securities till this time. So whatever changes are there in the company, that changes you are going to include in the information memorandum. That is very logical, because you have issued at the time of first offer of securities, you have issued the shelf prospectus. So you are again offering new securities of same type but with the same prospectus. So if there is some change in the company, that you have to also file in the information memorandum, right? Easy enough. Let's move ahead. The amount payable on application on every security shall not be less than -% of the nominal amount of security as per the Companies Act 2013. So as per the Companies Act 2013, it is asking you what should be the amount in the percentage term of the nominal amount of securities. 2.5%, 5%, 7.5%, 10%, as per the Companies Act, not as per the SEBI regulation. So we have different percentage for Companies Act and as per the SEBI regulation. So let me check the chat section. I haven't got any answers yet. I don't know why. Is my voice not clear? Everything is good now? Is everything good? Yeah, acha, okay, my chat section was not working. Okay, I'm getting the answers. Okay, sorry, my bad. Everything is good, yeah. So for this, I have got the answers, but not everyone is correct, but most of you are correct. That is 5%. But please remember, nominal amount is if 100, the minimum amount of application money would be 5 rupees as per the Companies Act. But as per the regulation, it should be 25%. See, it is written in the note. SEBI has prescribed the minimum sum payable on application at least 25%. So please remember this limit of 25%. Okay? So the minimum subscription should be made and it should be 5% according to Companies Act 2013, but SEBI has prescribed 25%. So regulations can be stricter than the than the law, right? So now the amount is 25%. Plus you have one more point here, that is minimum subscription in case of equity share capital as per SEBI is 90% of the issue size. Please understand, if we are offering 1 lakh shares, number of shares we are offering is 1 lakh shares to the public. So minimum number of shares that should be subscribed by the public should be 90%, that is 90,000, right? If it is less than 90,000, then we can't move ahead with the allotment part. Easy enough? Okay, good. Good, Pooja. Okay, let's move ahead. Whenever a company makes any allotment of securities, it shall file with the registrar a return of allotment within 30 days in which form? So any allotment of securities is done. So company has to file the return of allotment to the ROC. So in which form the company is going to do that? PAS1, PAS2, PAS3, PAS4. Let me check the chart section, then I'll give you the answer. And yes, everyone is correct. That's really good. PAS3, very good. So the number of days is 30 and the form is PAS3. And in case of default, 1000 rupee for each day during the default will be charged, or 1 lakh rupees, whichever is less. You have to remember the penalty amount as well if any default is made as per this provision, right? Okay, very good. Let's move ahead with the 11th question. Maximum underwriting commission that can be paid by the company for issue of debentures is dash of the issue price of the debenture. So we are talking about right now underwriting commission. So what is the maximum limit of underwriting commission that would be paid to the agent in case of debentures, not in the case of shares, in the case of debentures? So let me check the chat section, then I'll give you the answer. Would it be 1%, 2%, 2.5%, 3.5%, or the 5%? Let me check. And yes, everyone is correct again. That is 2.5%. Very good, everyone. And for the shares, it is what? It is 5%. And someone has given me the answer of shares as well. Nilesh has given me the answer of shares as well. Very good. So company may pay commission to any person in connection with the subscription of its securities. In case of shares, 5% or whatever rate has been authorized by the article. Article means article of association, right? Rules and policies of the company. Whichever amount is less. In case of debenture, it should be 2.5% or the rate that has been authorized by the company's article, whichever is less. Now, next question, question number 12. If the minimum amount has not been subscribed and the application money is not received within a period of dash days from the date of issue of prospectus. So what is the number of days that has been, what is the limit of number of days till you have to receive the application money or your share should have been subscribed from the date of issuance of the prospectus? The received amount shall be returned within 15 days. But the question is asking within how many days public should be subscribing to your shares, right? And if it is not, you have to return the money within 15 days. So within 30 days, it should be subscribed, within 60 days or within 45 days, within 90 days or within 15 days. So let me check the chat section. And yes, everyone is correct. You all are studying. Very good. So everyone is correct. That would be 30 days. Good. So within 30 days of the offering of the shares, these should be subscribed by the public, right? And if it is not the case, within 15 days, company has to return the amount. Question number 13th. Voting power in respect of the shares with DVR, differential voting rights of the company, shall not exceed dash % of the total voting power, including total voting power in respect of equity shares with DVR at any point of time. So basically it is asking you, in the case of DVR, the percentage of voting power should not exceed what % of total voting power? It should not exceed what % of total voting power? So it should not exceed 24%, it should not exceed 26%, it should not exceed 74 or 76%. Let me check the chat section. And yes, good, very good. And you have 74% as the answer. Really good. Okay. Now we have the explanation of this provision. This says condition for issuing equity shares with DVR. So we have some conditions, and one of the conditions we have discussed, कि voting power should not exceed 74% of the total voting power, right? Other conditions are this DVR should be authorized in the AOA, that is Article of Association. then ordinary resolution must be passed at the general meeting of the shareholders, and there should be no default in filing the financial statements and annual returns for 3 consecutive years preceding the year in which we are just seeing this condition. So immediately 3 financial year preceding the financial year in which we have decided to issue these DVRs, you should not have any default in filing these annual returns. So every year company, what does the company do? Company files this financial statements and the annual returns with the MCA or the ROC, Ministry of Corporate Affairs, or the Register of Companies. So company should not be in default for that, right? For 3 years. Now there is one more condition, but this now has been omitted. So this is not relevant right now. Question number 14th. To issue shares with DVR, a company should not be penalized under RBI Act, FEMA Act, etc. during last dash years. So company should not be penalized under RBI Act or FEMA Act. So in the last 3 years, 4 years, 5 years, or 6 years, what would be the number of years? So let me check the chart section, and yes, everyone is correct. That is 3 years. Everyone is correct. Good everyone. No one is wrong here. Okay, good. Now these are the conditions. Basically we have talked about this, but apart from the conditions we have talked, you have this condition of last 3 years for any offenses under RBI Act, SEBI Act, and the FEMA Act, right? Now let's talk about the question number 15th. In the disputed cases, how many years be recorded related to the share certificates be maintained in case of disputed cases? For how many years the records with relation to the share certificate should be maintained? For 5 years, 8 years, 10 years, none of the above. Tell me in the chat section, everyone. Yeah, everyone is correct. Not everyone. Okay, not everyone. Yeah, okay. Yes, Ocha, you are giving actual years. Okay, that's why I'm saying not every year. Not everyone is correct here. But yeah, few of you are correct. The answer would be none of the above, because in the disputed case, what happens in the disputed case, you have to store it permanently. Please remember this. But in the case of normal, in the normal cases, these books and document related to the issue of shares should be preserved for 30 years. But in case of disputed, in the disputed cases, it should be preserved permanently, the documents or the books related to the issuance of shares. Please remember this point, right? 30 year is for normal case scenario, right? Now certificates, this is irrelevant. Now question number 16th. Preference shareholders shall have a right to vote on all resolution of the company if their dividend is not paid for the last dash years or more. So you have to give me the number of years. So if the dividend is not getting paid to the preference shareholders, they have the right to vote on all resolution, right? But for how many years? 2 years, 3 years, 4 years, 5 years. For how many years? If dividend is not paid, they are allowed to vote on all resolutions. 2 years, 3 years, 4 years, or the 5 years. Let me check the chart section. And yes, again, not everyone is correct here, but yeah, most of you are correct. That is 2 years. Not everyone is correct. 2 years would be the correct answer. Please remember these clauses. These can be asked directly in the examination, right? So let's talk about the underlying provision in detail. So in normal case scenarios, preference shareholders have the right to vote on resolution only on certain resolution, like the resolutions which are directly affecting their rights, or the resolution for the winding up of the company. For these 2 resolutions, they can vote, or for repayment or reduction of equity and or preference share capital. So obviously, so these 3 cases are there in which they can vote. But there is one more condition. If the dividend in respect of these preference share has not been paid for a period of 2 years or more, they will be allowed to vote on each and every resolution. Okay, so remember this 2 years provision, right? Okay, let's move ahead with the 17th question. The special resolution authorizing the issue of equity shares shall be valid for making the allotment within a period of not more than dash from the date of passing of the special resolution. So it is asking you, you have basically special resolution, that is authorizing the sweat equity shares, but that would be valid for how many months, right? And if these months have been passed, you have to again pass this special resolution. So for how many months this special resolution is valid to make the allotment? 6 months, 12 months, 2 year, 2.5 years. So let me check the chat section first of all. And not everyone again is correct, but most of you is correct. That is 12 months or 1 year. Okay, good. Now, please understand, in this sweat equity shares, we directly allot shares to the officers or directors, right? Unlike in the case of ESOPs. What happens in the case of ESOPs? In the case of ESOPs, we have something called vesting period. So some eligibility conditions needs to be satisfied by the employees. Then we are going to allot the shares to them when they have exercised their right in the case of ESOPs. But in the case of sweat equity share, you are not basically getting any amount from the officers or from the employees. You are directly allotting the shares to them. But after passing the special resolution, and after that, within 1 year, you have to allot these shares, right? Okay. So validity of this SR is 1 year. We have talked about that. And this is also one more condition that says company shall not issue sweat equity shares for more than higher of 15% of the paid up equity capital or 5 crores in a financial year. Higher of these two amount. They can't issue sweat equity shares higher than that, right? And it can't exceed beyond 25% of the paid up share capital at any time as well, right? So within a financial year, 15% is a limit, but overall it can't exceed 25%, right? Now, question number 18th. The new debenture certificates in case of transfer shall be delivered within dash of receipt of transfer deed. So whenever you transfer the debenture certificates, within how many months or within how many days the company has to deliver this issue of or new certificates to the new debenture holders? Within 15 days, within 1 month, within 3 months, within 6 months. What should be the answer? Let me check the chat section first of all, and then I'll give you the answer. Okay, now in this question, everyone is correct. Very, very good. 1 month. Everyone is correct. No one is incorrect here. That's really nice. Okay, so you have to remember this time period in case of all the instruments or securities, like in the case of shares and debentures. So what is the underlying provision? It says, in case of subscribers to the memorandum, that is in the case of first subscribers. Memorandum means MOA or AOA, right? These are the primary documents. When you incorporate the company, these are the primary documents. So in this case, within a period of 2 months from the date of incorporation, company has to deliver the certificates, right? In case of subscriber to the memorandum. Now, in case of any allotment of any of its shares, in case of fresh allotments after this memorandum, whatever allotments you are doing, in that case, in the case of shares we are talking about, within 2 months again from the date of allotment, company has to deliver the share certificates, right? In case of transfer or transmission, what is the difference between transfer and transmission? Transfer is on purpose, but transmission is automatic. If someone dies, the whoever holds the authority in the will of a person who is dying, right? So in that will, it is written who is going to hold these shares after his death. So as per that, we call it nominee basically. So this is the case of transmission, but transfer is on purpose when you have sold your securities like equity shares or the debentures, right? In that case, it is transfer. So in case of transfer or transmission of securities includes your debenture as well as shares. within a period of 1 month from the date of receipt of the transfer deed. The transfer deed the company is getting from the transferor or the transferee, within 1 month they have to issue the certificates in case of any security, in case of debenture or in case of share. Clear? But in case of any other allotment of debentures, within a period of 6 months from the date of allotment. So all these time period you have to remember. Next question, question number 19. In case the company has incurred loss during the current financial year up to the end of the quarter immediately preceding the date of declaration of interim dividend, such interim dividend shall not be declared at a rate higher than the average dividend declared by the company during the immediately preceding how many financial year. So you are paying the dividend, interim dividend, even if you don't have enough profits. So you should not be giving the interim dividend more than average dividend paid by the company during the preceding how many years? 2, 3, 4 or 5. So I guess everyone would be correct here. This is the easy question. Yes, answer would be 3 years, average of 3 years. That's really good. Question number 20. In the event of inadequacy or absence of profits in any year, a company may declare dividend out of free reserve subject to the fulfillment of the following condition. Again, same case. In case there is absence of profit, then we are declaring the dividend out of free reserve. But certain conditions have to be fulfilled. In that it is asking you total amount to be withdrawn from such accumulated profits, that is your free reserves, general reserves, right? You are withdrawing money from the accumulated profit. It shall not exceed dash of the sum of its paid up share capital and free reserves as appearing in the latest audited financial statement. So you should not be exceeding half of that. Half means 50%, 1/4 that is 25%, 1/5 20%, 1/10 10%. So what should be the answer? You should not exceed how much percent? So let me check the chat section, and yes, everyone is correct. That's really good. I can see everyone is correct. That is 1/10. Okay, that's really good. So let's talk about the underlying provision in detail. So in case of inadequacy of profits, what happens? Company might declare the dividends out of free reserve, but provided the rate of dividend declared is not going to exceed the average rate of dividend for the immediately preceding 3 years. And second case was that it should not exceed 1/10. Please remember this point. It shall not exceed 1/10 or 10% of the sum of its paid up share capital and the free reserve as appearing in the latest balance sheet or financial statement. Third condition is that after you have withdrawn this amount, you have identified this amount and now you are going to pay the dividend out of it. But whatever amount you are going to withdraw, it is going to be first utilized to set off the losses that you have incurred in the current financial year. After that, whatever is left, that you are going to pay as the dividend to the equity shareholders, right? And one more condition is this: balance of reserve after these withdrawals, the whatever amount you have withdrawn, after this withdrawal, the balance of reserve shall not fall below 15%. So this also you have to remember. It shall not fall below 15% of the paid up share capital as appearing in the latest balance sheet. So you have to remember 2 points. First of all, whatever amount you are withdrawing from the accumulated profit, it shall not exceed 10% of total of paid up share capital and free reserve, plus whatever amount you are going to withdraw. After withdrawing that amount, reserve should not fall below 15% of the paid up share capital. So these 2 points you have to remember. Question number 21st. If dividend not paid or warrant not posted by the company within 30 days of declaration. So you all know whenever the dividend is declared, company has to pay the dividend within 30 days. But if company fails to do that, what is going to be the interest that is going to be charged from the company at dash per annum? 10%, 12%, 15% or 18%. So let me check the chart section, then I'll give you the correct answer. And yes, few of you are correct, but few of you are incorrect. Okay, now in this question, not everyone is correct. Option number 18% is correct, but some of you have given me the B answer as well. So please remember, we are right now talking about if dividend is not paid within 30 days of declaration. See, we have two rates. I'll just discuss this with you in this explanation. See, from this slide, a question can directly be asked in the examination. This slide is very, very important. Please understand this slide very carefully. What happens after the company has declared the dividend? Within 5 days of declaration of dividend, company has to deposit this in the scheduled bank within 5 days. So one limit, you have to remember this, right? Then second limit is after declaring the dividend within 30 days of declaration, they have to pay dividend to the shareholders, right? But if they haven't paid the dividend, then interest should be levied at 18% per annum, right? If within 7 days from the expiry of this 30 days, suppose dividend is not paid or it is not claimed within 30 days. So now what is going to happen? Within 7 days from the expiry of this 30 days, what is going to happen? Company has to transfer this amount to the unpaid dividend account within 7 days after the expiry of 30 days. So you have to remember these this period of 7 days as well. Now suppose if company fails to do this, if company fails to transfer the amount to the unpaid dividend account within 7 days, then the interest levied will be 12% per annum. Please remember these two figures. Now, after the transfer to the unpaid dividend account, within 90 days of the transfer, what is going to happen? The company has to prepare the statement. Now again, you have to remember this 90 days after transferring it to the unpaid dividend account. Within 90 days, company has to prepare the statement and it has to place this on the company website, right? So that if any shareholder is there, he can identify his name and he can claim his dividend, right? Okay. Question number 22nd. This says amount in the unpaid dividend account lying there. Where? In the unpaid dividend account. If it is lying there, for how many years? So that it must be transferred to the Investor Education and Protection Fund. So for how many years? If it is lying in the unpaid dividend account, so within 7 days we are transferring it to the unpaid dividend account, and we have prepared the statement as well within 90 days, and we have published that into the website as well. But even after that, if shareholder is not claiming their dividend, so what we are going to do with that dividend? We are going to transfer it to the IEPF. But if it is lying there for how many years? 5, 7, 8 or 10. So let me check the chat section, and yes, everyone is correct again. Very, very good. So if it is lying there for 7 years, yes, we have to transfer this into IEPF, right? Very good. Next question. And please remember this, it has to be 7 consecutive years. So please remember this. If there is any year in between the 7 years, if dividend for any year is paid to the shareholders, then you are not going to transfer it to the IEPF. These 7 years should be consecutive in nature. That is important, right? Let's move to the 23rd question. The first auditor of a non-government company needs to be appointed by the board in how many days from the date of the registration of the company? Now give me the answer of this question. For the non-government company, it has to be appointed by the board, but within how many days? Within 15 days, within 30 days, within 90 days, or within 180 days? Very easy question. Let me check the chat section. And okay, not everyone is correct here. Yeah, now everyone is correct. Okay, I think Nilesh has mistyped it before. Now everyone is correct. Again, I have got some wrong answers as well. Okay, don't worry if you don't know this. You have to remember this thing, that days are 30 days. So the first auditor of the non-government company, we are not talking about the government company, we are talking about the non-government company. So for non-government company, it has to be done within 30 days. right? Okay, just wait for a minute, let me adjust my seat. Okay, yeah, so 30 days would be the correct answer. Now see what is happening here. The first auditor of the company other than the government company, right, shall be appointed by the board of directors within 30 days. Please remember this thing, within 30 days. Now in case board of director fails to do that within 30 days, what is going to happen? It shall inform the members of the company, right, and member is going to appoint the auditor. In case the board of directors fail to do so, the members are going to appoint the auditor within 90 days. So you have to remember this time limit as well. So BOD has to appoint the auditor within 30 days, but if they fail to do so, the members are going to appoint it within 90 days in the EGM, that is extraordinary general meeting, right? And please remember, first auditor is going to hold the office till conclusion of first AGM. Then again the auditor is going to be appointed and he is going to hold the office for till 6th AGM, that is for 5 years, right? Okay, question number 24th. It says the non-government company except for IFSC company shall file a notice of appointment of auditor in the annual general meeting with the registrar within how many days of the meeting in which the auditor is appointed. So again we are talking about the non-government company, right, but except for the IFSC company. So within how many days it shall file a notice of appointment of the auditor with the registrar? 10 days, 15 days, 20 days or 30 days? What should be the answer here? You tell me. And yes, I have started to get the answers, but again not everyone is correct, but few of you are correct. That is 15 days. Please remember, most of the time, please remember this point, most of the time when you have to file something to the registrar, to the ROC, any return you have to file, most of the time the limit will be 30 days, most of the time. So I can understand why you have given me 30 days answer. Few of you have given me 30 days answer, but in this case, in the case of appointment of auditor, you have to give that within 15 days. This is the exception case, right? Okay, not the exception case, but something different than the usual. So within 15 days it has to be filed with the registrar, right? Now for the IFSC company, please remember limit is same as 30 days only, right? Question number 25th. The individual can be appointed as auditor for one term of dash consecutive years, and after that it can be reappointed as the auditor after a cooling off period of dash years. So the auditor can be appointed as the auditor for one term. For how many consecutive years? It is asking you for how many consecutive years, and what is the cooling off period. And we are, in this case, we are assuming the auditor is a person, chartered accountant, not the firm, right? So it can be appointed for 5 years and the cooling off period is 5 years, or it can be appointed for 10 consecutive years, or it can be appointed for 5 and the cooling off period is 10 years, or D option is 10 years or 5 years. So what should be the answer here? Let me check the chat section. Everyone, yeah, everyone is correct again. No, not everyone. Someone is incorrect here. I will not take the name, but one person is incorrect. Yeah, now he has corrected himself. Okay, so the answer is yes, 5 years and the 5 years. So in case of a auditor, he is going to be appointed for 5 years, for 5 consecutive years, and the cooling off period is also 5 years. It is not asking you how many terms will be there. It is asking you for one term, how many consecutive years will be there. Though the single person will be appointed for 2 terms, it can be appointed for consecutively 2 terms, but it is not asking the question. It is asking you for one term, what is the number of years, right? Okay. Now question number 26. Under which of the following condition the person can be appointed as the auditor? Person is an officer or employee of the company. So it is asking you under which condition it can be appointed. So if person is officer or employee of the company, it won't be it won't be appointed as the auditor. Person is an auditor in 21 small companies. Person has been convicted by the court in last 5 years, so he can't be appointed in the as the auditor of the company. A person whose relative holds securities of 1.5 lakh in the company, he also can't get appointed as the auditor. So the answer would be yes. I can see again, yeah, in this question in this question every one of you is correct. Okay, that's good. Option number B would be the correct answer, because this limit of 20 companies doesn't include the small companies. Therefore, even if the auditor is auditing 21 or 30 small companies, he can be appointed as the auditor for any other company as well, right? So what are the conditions? These are the qualification and the disqualification. Let's read about that. So we are going to talk about the disqualification. So following shall be appointed as the auditor shall not be, we are talking about the disqualification. Following shall not be appointed as the auditor if he is an employee or officer of the company, or anyone who is further employee of the officer of the company. In that case, he wouldn't be appointed as the auditor. A person who is partner in the company, a person or a firm who is having the business relationship with the company, he won't be appointed as the auditor. Now, fourth point says, a person whose relative is director or KMP in the company, then also he won't be appointed. A person who is in full time of the in some other company, see, understand this point. If any CA is there and he is doing a job, so instead of practicing, he is doing a job in a company, so he won't get appointed as the auditor for any company, because he is doing the full-time job. If he is a practicing chartered accountant, then only he can be appointed as the auditor. So even if the person is in the full-time employment in any company, he won't get appointed as the auditor. If person or the partner of the firm is already holding appointment of more than 20 companies, this you have to remember. If that person or the partnership firm is holding the appointment as the auditor for more than 20 companies, but this limit of 20 company is not going to include the one-person company or small company or private company who has the share capital, paid a share capital less than 100 crore rupees. So this 20 companies doesn't include these type of companies, right? 7th point says, if a person has been convicted by the court and 10 years has not been passed after that conviction, he won't be appointed, right? So in the option, we had one option of 5 years. So if in the last 10 years he has been convicted, he won't get appointed as the auditor of any company. A person who directly or indirectly renders any service referred to in section 144. So basically this section talks about the services that won't be given, that can't be given by the auditor of the company to the company, like the management services, accounting services. So if any services is being provided by the chartered accountant or chartered accountancy firm to the company, same company can't appoint that person as the auditor, right? A person who himself or his relative or partner is holding securities in the company, so that can't be appointed. But there is an exemption in this. You have to remember this point as well. If relative holds securities less than 1 lakh, then the person can be appointed as the auditor. But if it holds, the relative of the CA holds securities of more than 1 lakh, then the CA can't be appointed as the auditor. Or indebted or owns more than 5 lakh to the company, then also he can't be appointed as the auditor. Or he himself or his relative or partner has given the guarantee of more than 1 lakh for a third person, then also he can't get appointed as the auditor. So you have to remember all these provisions and data, right? So please remember 1 lakh, 5 lakh and 1 lakh again, right? Okay, and this limit of 20 companies you have to remember. Question number 27th. Fraud of value greater than or equal to dash are reported to central government by the auditors. 50 lakh. So if fraud is more than or equal to 50 lakh, they have to report this to the central government. Or if the fraud is of 1 crore or more, or 2 crore or more, or 5 crore or more, So what would be the answer? You tell me in the chat section. Yes, everyone is correct. Yes, that is 1 crore. Absolutely correct, everyone. So if the fraud is more than or equal to 1 crore, that should be reported to the central government. If it is less than 1 crore, so it can be reported to the audit committee, right? And if there is no audit committee, it shall be reported to the board of directors. Question number 28. A company is dealing in category A products. So we have different category, category A products and category B products. These category A products are regulated products. We will see that, such as pharma and telecom. So why do we call this regulated industry or products? Because they have the they can impact the society. They have the social impact. Pharma, telecom, right? So these are the category A products. Then for the company to come under the ambit of conducting a mandatory cost audit. So for few of the companies, cost audit is mandatory. But when? For this category A product, when it is mandatory? If its annual turnover shall be dash crore or more and aggregate turnover of individual product or products or services for which cost records are required to be maintained is dash crore or more. So if annual turnover is more than how much limit, and if individual product turnover is greater than how much amount, so you have to give me the answer. If annual turnover should be greater than 50 crores or 100 crores, 100 crores or 50 crores, and your individual product turnover should be greater than 25 crores, 50 crore, 25 crore or 50 crore. So what should be the answer? A, B, C, D. Let me check the chat section, then I'll give you the answer. And yes. Category A, I have got the answers. For category B also I have got the answers. That's really good. So for these categories, for category A, the answer is 50 crore and the 25 crore. The limit for the category A is lesser than that of the category B because they can impact the society. Right? They have the social impact. That's why their limit is less. This is the logic why the limit is less in the category A, right? Okay. Now, let's talk about the category B as well. So for category A, if annual turnover in the financial year is greater than or equal to 50 crores and aggregate turnover of the individual product is greater than or equal to 25 crore for which individual cost data is to be maintained, then these provision will be applied. But under category B, the limit is greater than or equal to 100 crores aggregate turnover, overall turnover, but for the individual product, it is greater than or equal to 35 crores. So you have to remember these points. 50 and 25 crores for category A, 135 crores for category B for the cost audit. Okay. Question number 29. A company has 3 directors and company is public company with a turnover of 150 crores. So 3 directors, right? And company is the public company with a turnover of 150 crores. What shall be the number of independent directors here? So we have certain limit of independent directors, plus we have some additional conditions as well for few of the public companies. So we will talk about that. So you have to give me the answer. What should be the minimum number of independent directors in this company, which is a public company which has a turnover of 150 crores? 1, 2, 3 or 4. What should be the answer? Let me check the chat section. Yeah, I have got few wrong answers as well, but I can understand. But few answers I have also got correct. Okay, yeah. Now I'm getting the correct answers. Yes. So the option number B would be the correct. That is 2 directors. And how? Let's discuss how. So first of all, you all know this thing. I hope ki 1/3 of directors should be the independent directors. So every listed company shall have at least 1/3 of its director as the independent directors, right? And if any fraction is there, you will round it off to the next number. Suppose when you do 1/3 of 10, it comes out to be 3.33, isn't it? So it will be rounded off to 4. So the number of minimum directors, independent directors would be 4. But apart from this condition, we have also one more condition. So public companies, so whether they are unlisted public company or whether they are listed public companies, for them if the paid up share capital is more than this limit, you have to remember, if the paid up share capital is more than or equal to 10 crores or turnover is more than or equal to 100 crores and loans, debenture and deposit is more than or equal to 50 crores. So you have to remember these points: 10 crores for paid up, 50 crores for loans, 100 crore for the turnover. If it is more than that in any public company, whether it is listed or whether it is unlisted, then it shall have at least 2 independent directors. Please remember this point. So in this case, see, what is the turnover? Turnover was 150 crores. So for this company, it should have at least 2 independent directors. So therefore, the answer would be the two directors, right? Option number B. Now these are exempted, that is unlisted, joint venture company, wholly owned company and dormant companies are exempted from this condition of 2 independent directors. Next question we have is, which of the following component shall not be the part of independent directors remuneration? So fee, commission based in profits, stock option, reimbursement for attending the meeting. So let me check the chat section. This is very easy question. Okay, so I haven't got the answers yet. Yes, now I am getting the answers, and whoever is giving me the answer, he is absolutely correct. Fee is going to be included, commission based in the profit, it is also going to be included, reimbursement for attending meetings, that is also going to be included, but your stock option would not going to be included. Yes, so the correct option would be option number C. Very, very good, everyone. Now let's move to the 31st question of the day. That is, the independent directors of the company shall hold at least dash meetings in a financial year without the attendance of non-independent directors and members of the management. This is a very important question. So independent directors should hold at least how many meetings in the financial year without the attendance of the non-independent directors and other members? 1 meeting they should hold at least, or 2 meetings, or 3 meetings, or 4 meetings. My voice is clear now, absolutely clear, because sometime it might happen ki my voice, if there is any problem in my voice, just do let me know in the chat section, because in one of the previous session it happened, right? And nobody has told me that. Okay, if that happens, just do let me know in the chat section. Okay, so the answer is yes, everyone is correct. That is option number A, that is 1. Very good, everyone. Everyone is correct here. Good. Okay, let's move ahead. So let's talk about the underlying provision first of all. So independent directors of the company shall hold at least 1 meeting in a financial year without the attendance of non-independent directors and the members of the management, right? And each and every independent director should try to be present in the meeting. And what is going to happen in this meeting? They are going to review the performance of non-independent directors. Therefore, it is saying that attendance of non-independent directors is not needed, right? Because this meeting is being held to review the performance of the non-independent directors. That's why. And to review the performance of chairperson of the company and to assess the quality, quantity and timeliness of the flow of information between the company management and the board that is necessary for the board to effectively and reasonably perform their duties. So everything has to be assessed in this meeting by the non-independent directors, because see, directors, the directors, board of directors or the management are handling the company's affairs. So they might have the conflict of interest. They might do fraud. They might do fraud to get extra benefits, right? So that's why the meeting of the non-independent director is must. At least 1 meeting should be there. Okay. Now, question number 32. It says, an independent directors can hold office for a maximum of dash consecutive terms and post the completion of these maximum number of consecutive terms. Now it is asking about the consecutive terms, not the years in terms. It is asking you what is the maximum terms. And after that consecutive terms, the independent directors needs to serve the cooling period of how many years before he again become the eligible for the post. So for how many consecutive terms he can hold the office? 2, 2, 3 or 3. And what is going to be the cooling period? 2 years, 3 years, 2 years or 5 years. So let me check the chart section first of all, and then I'll give you the answer of this question, right? Okay, so I have started to get the answers, and yes, everyone is correct here. Yes, everyone is correct. That's really good. For 2 consecutive terms, he can hold the office, right? And after that, the cooling off period should be of 3 years. Good. Now, 1 year, one term could consist of maximum of 5 consecutive years. So these 2 terms, this first term could have the 5 consecutive years. Again, the second term could have the 5 consecutive years. After that, 3 years of cooling period is required so that he can be basically appointed again as the independent director. Easy enough. Okay, let's move to the 33rd question. This question says small shareholders means a shareholder holding shares of nominal value of not more than dash rupees 10,000, 20,000, 50,000, 1 lakh. So shareholders value is what? Let me check the chart section, then I'll give you the answer. So yes, I have got the answers. It is absolutely, they are absolutely correct. Everyone is absolutely correct. That is 20,000. That's really good. So the shareholders who are holding less than 20,000 worth of shares in terms of face value, then they will be considered as the small shareholders, right? And they can elect their director as well. We call them small shareholders director, right? So a listed company may have one director elected by the small shareholders, and small shareholders are what? Are the shareholders who are holding not more than 20,000 worth of shares in respect of face value. Very, very good, everyone. Question number 34th. It says if a company has 80,000 small shareholders in total, then how many minimum number of small shareholders shall be required to serve a notice to appoint small shareholders director? If a company has 80,000 small shareholders, then it is asking you how many number of small shareholders shall be required to serve a notice. So they have to send the notice now to appoint the small shareholders. So how many number of shareholders would be required for that? 10,000, 8,000, 5,000 or 1,000? Let me check the chat section. And yes, very, very good. Nilesh is right. Yeah, that is really good. Good, everyone. That will be 1,000. So limit is 10%. Very good, everyone. Very good. Everyone is correct. 10%. The 10% limit is there, or 1,000 limit is there, whichever is lower. Whichever is lower. So 10% of 80,000 is 8,000, and you have 1,000 limit. Which is the lower amount? 1,000. So the answer would be 1,000 here. Very good, everyone. Okay, good. Now, next question. Question number 35. The application for allotment of DIN needs to be made to which entity? It is very easy question. SEBI, Ministry of Finance, Income Tax Department, Ministry of Corporate Affairs. So answer is very easy. I hope everyone would be correct here. And yes, option number D would be the correct answer. So everything has to be filed with the MCA, that is Ministry of Corporate Affairs, right? So the answer would be option number D. Now, let's move ahead with the 36th question. This says the board of the company gets its powers through special resolution to appoint which of the following directors. So what happens most of the time, the directors are getting appointed in the annual general meeting. In the general meeting, they get appointed, right? But what happens when the board of the directors have the authority through the special resolution that has been passed in the general meeting? Through the resolution, they can appoint any director. So which kind of director they can appoint in the board of directors meeting? Additional director, or alternate director, or nominee director, or any of the above? What should be the answer here? So let me check the chat section. And okay, in this question, not everyone is correct, but few of you are correct, but not everyone is correct. Answer is alternate director, but few of you have given me the answer as D as well. So alternate director can be appointed by the board of directors. So let's read out the underlying provision here. So company may give authorization to the board of directors through the AOA, that is Article of Association, or through the special resolution, right? Is a special resolution. Now, this special resolution is helpful to appoint the alternate director. Now, for this, to appoint the person to act as the alternate director, first of all, let's understand about the alternator. What is that alternator? Then we will understand till how much time he can hold the office. So this alternate director is someone who is getting appointed in place of the regular director if that regular director is not present in India. So only in that case, this alternate director will be appointed, right? Now, this alternate director has been appointed by the board of directors, the board meetings. Now, this alternate director will hold the office till the regular director is going to come back. When the director is going to return to India, then this alternate director is going to vacate the office, right? Okay. And what is the time limit? Time limit is this 3 months. You can also call it 90 days, but as per the provision, it is 3 months. So you have to remember this limit of 3 months as well. So the regular director is absent from India for not less than 3 months, 3 months or more than the 3 months. If he's absent, then only in place of him, alternate director can be appointed. So you have to remember this point. Now, a person who has been imprisoned for 7 years or more cannot be appointed director till the completion of dash years from the date of expiry of the sentence. So if any person has been imprisoned for 7 years or more, so how many years should have been passed after that conviction so that he can be appointed as the director? So cooling off period, basically 5 years, not exactly cooling off period, but how many years have been passed after that conviction? 5 years, 7 years, 10 years, or none of the above? Yeah, Padmini is correct here. He would be banned. Yeah, and everyone else is also correct. That's really good. Everyone is correct. So what happens now? He will not be allowed to be appointed as the director in this case. Why? Let's talk about the underlying provision. So a person shall not be eligible for the appointment as the director of the company if he is of unsound mind. First condition is that if he is of unsound mind and it stands so declared by the competent court, so he will not be appointed. Second is if he is undischarged insolvent, and third condition is that he has applied to be adjudicated as the insolvent, but his application is still pending. He is still insolvent, right? So he will not be appointed as the director. Fourth condition is important. The question is talking about the fourth condition only. If he has been convicted by a court of offense, by a court for any offense, and he has been sentenced to imprisonment for not less than 6 months. So from 6 months, not less than 6 months, but less than 7 years. See what is written? Less than 7 years. That means from 6 months till 7 years. If for this time period he has been imprisoned by the court, then he can be allowed to be appointed as the director, but after the passing of 5 years. After the expiry of that sentence, 5 years should be lapsed. After that, he can be appointed as the director. But if he has been convicted for more than 7 years or 7 years, then he will be banned to be appointed as the director. Right? Clear? Easy enough? Okay, let's move ahead. Question number 38. In case of a company, what is the maximum number of days that can be there between 2 consecutive board meetings? Now the question is asking about the time limit allowed for 2 consecutive board meetings? Assuming no exceptional cases. 90 days, 120 days, 180 days, 240 days. You give me the answer in the chat section. It's a very easy question, right? Yeah, everyone is correct here. Again, the answer would be, yeah, 120 days. Everyone is correct in this question. I'm very proud of you all. I'm really glad to see this. Good. So answer would be 120 days. Now, let's read out the underlying provision as well. Every company shall hold the first meeting of the board, first of all, within 30 days. That thing you have to remember. Within 30 days, it has to do the first board meeting. After this first board meeting, they should hold minimum of 4 meetings every year. Every year 4 meetings should be held, but the condition is that not more than 120 days should be passed. There should not be more than 122 days between 2 consecutive board meetings, right? So not more than 122 days, 120 days shall intervene between 2 consecutive meetings, right? Question number 39th. The draft minutes of the meetings, which is done electronically, shall be circulated among all the directors within how many days of the meeting, either in writing or through the emails. So when the meeting is being held electronically through the Zoom and through the YouTube, so within how many days the draft minutes of the meeting should be filed with all of the, should be circulated among all the directors within 10 days, within 15 days, within 30 days, or within 60 days. What is the time condition? And yes, everyone is correct. Again, I'm really glad to see this question also. Everyone is correct. That is 15 days. Very, very good. So within 15 days, the minutes of the meeting should be circulated to all the directors if the meeting is being held electronically, right? Okay. Now, after circulation of this minutes, what happens? Within 15 days, they have to file it. But after this, there is one more condition. Every director who attended the meeting, whether personally or through video conferencing, shall confirm about the accuracy of the recording of the proceeding. This condition also you have to remember. He has to give his confirmation about the accuracy of the minutes, of the draft minutes, within 7 days, right? And if he does not give his approval within this 7 days, it will be assumed to be approved by him. This condition also you have to remember. This time period also you have to remember, right? Now, next question. Okay. Next question is question number 40th. In case of OPC, that is one person company, if more than one director is there, they can comply with the provision of section 173. That is 173 talks about the board of directors meeting by just having at least one meeting of the board of directors conducted in each half of a calendar year, and the gap between 2 meetings should not be less than dash days. So basically some exemption is being given to the one person company, right? So it is talking about that only. So in the one person company now, you don't have the maximum time period allowed. In case of one person company, minimum period is given to you. Ki between 2 meetings, the gap should not be less than how many days? It should not be less than 90 days, 120 days, 150 days, or 180 days. Let me check the chat session, then I'll give you the answer. And yes, in this question, not everyone is correct, but most of you are correct again here. That will be 90 days. Not everyone has given me the correct answer here, but don't worry if you don't know this. See, understand, in case of normal company, the maximum number of gap is given, that is 120 days. But in case of OPC, a minimum number of gap is given to you. That is 90 days, minimum number. And OPC can conduct one meeting in each half year. That's it. They don't need to conduct 4 board meetings throughout the year, right? Please understand this. This is the difference. Okay. Now, जस्ट वेट फॉर अ मिनट या ओके ठीक है मेरा एक डिविडेंड आया था वो चेक कर रहा था मैं ओके नाउ लेट्स टॉक अबाउट yeah the underlying provision is this okay question number 41 a company is a section 8 company and it has 4 directors what shall be the minimum number of directors present in the meeting that is going to constitute a quorum. What is this quorum? First of all, let's understand this. Quorum is the minimum number of directors that are required to conduct the meeting. That is called quorum. So we are right now talking about the section 8 company only, and it has 4 directors. So it is asking you the minimum number of directors for the section 8 company. So it would be 1, 2, 3 or 4. So what should be the answer here? And I have started to get the answers, and yes, now everyone is correct again. That's really good. The answer would be minimum 2 directors would be needed in case of section 8 company. Let's talk about the underlying provision here. So for the quorum of the meeting, 1/3 of its total strength is required or 2 directors are required, whichever is higher, right? This strength does not include the directors whose places are vacant, obviously, right? So 1/3 of its total strength is required or 2 directors, whichever is higher. Now, when you do, and in the case of section 8 company, we will understand this. First, understand this. The participation of the directors by the video conferencing or by other visual means or through the electronic means will also be counted for the purpose of quorum. But what do we have here? We have the exception for the section 8 companies. Now, in case of section 8 companies, the quorum of the meeting of the board of the company shall be 8 members. Please understand this. What are the section 8 company? You know, na? These are charitable companies. They are not for profit organization basically. So under Companies Act 2013, we have the section 8 companies as well. One way is to register them is through State Societies Act, right? And another way to register these non-profit organization is through Companies Act 2013. We call them section 8 companies, right? Okay. So for them, 8 members are required or 25% is required of its total strength, whichever is less. But when you do 25% of 4, that is 1/4, that will come out to be 1. But you can't have the quorum at 1. It says it is subject to the limit of 2. It should be at least 2. So just like the normal case scenario, we should have at least 2 members for the quorum. So 2 members will be required, but you have to remember this point. 8 members or 25%, whichever is lower in case of section 8 companies, right? Okay. Question number 42nd. It says a company being not a section 8 company, now it is not the section 8 company, has total of 12 directors. Out of this, 9 directors are interested directors, so they are not independent. In this case, what shall be the minimum number of non-interested directors? What shall be the minimum number of non-interested directors present in the meeting to constitute a quorum? So 3 non-interested directors, 8 interested directors. So this you can cancel obviously. 2 non-interested directors or 12 directors in the no, this also you can eliminate. So what should be the answer here? 3 non-interested directors or 2 non-interested directors. You will understand this in the next slide. Don't worry if you don't know this answer. We will talk about the detail of the provision as well. So let me check the chat section, and yes, few of you have even given me the answers as well, and yes, all of you are correct. That is 2 non-interested directors. But the thing is how? Let's talk about that. So quorum of the meeting of the board in case of interested directors, in case the interested directors are equal to or greater than 2/3. So in this case, what is happening here? You have section 8 companies and total directors are 12. Not being a section 8 company, it is not a section 8 company, it is normal company, and it has 12 directors, and out of this 9 are interested directors. So that means it is more than 2/3, right? It is more than 2/3 because it is more than 8 directors now. So in that scenario, quorum shall be minimum of 2 directors. So you have to remember this limit. If total interested directors are equal to or more than 2/3, then quorum shall include 2 directors which are non-interested directors. Right, so this was the answer here. 2 non-interested directors. Option number C is the correct answer. Question number 43rd. If dash or more of the total number of directors of the company think that any resolution under circulation must be decided at a meeting, the chairperson shall put the resolution to be decided at a meeting of the board. So if how many or more of total number of directors think that any resolution under circulation, see, it might happen sometime, it happens in the company, resolution is passed through the circulation itself, right? But how many total number of directors, how many directors out of total number, if they think resolution should be passed in the meeting itself, so what is the minimum requirement for that? 1/2, 1/3, 1/4 or 1/5? What should be the minimum requirement for that? Let me check the chat section, and yes, everyone is correct again. That will be 33.33%. Yeah, that will be 1/3. Absolutely correct. Okay, that's good. Good, everyone. Okay. So if company is thinking to pass the resolution through circulation, if 1/3 of the directors think that it should be passed within the meeting itself, so that will be decided in the meeting itself. So question number 43 we have done. Now question number 44. Who among the following shall mandatorily constitute the audit committee? So who is required to form the audit committee? Every unlisted company on the verge of getting listed, every private company, every unlisted company with a paid up capital of 5 crores, every unlisted company with a turnover of 100 crores. So who should require to form the audit committee? Paid up and turnover, you have to give me the answer here. Very easy question, nothing very difficult here, right? So you should be knowing the amounts by now. Okay, let me check the chat section, and yes, most of you are correct again, right? I'm really glad to see this. The entry would be 100 crores. So if turnover is more than 100 crores, then the audit committee must be there. Really good. Okay, so this is the condition. Every listed company plus whatever was the condition for the independent directors, condition is same for the audit committee. Paid up share capital should be greater than or equal to 10 crore. In the option we have been given 5 crore. That's why this option was eliminated. So paid up share capital must be equal to 10. Please remember these points. Huh? Paid up share capital must be equal to or less than 10 crores. Loans should be equal to or greater than. Paid up share capital greater than or equal to 10 crore. Outstanding loans should be greater than or equal to 50 crores. Turnover is 100 crores. So you should remember it like this: 10, 50, 100. Very easy. This is paid up share capital, this is loans, and this is turnover. Right? So they should include the audit committee as well. Right? Next, let's move ahead with the next question. It says permission to donate charitable funds is required in general meeting when aggregate amount of donation in a financial year which exceeds dash of its average net profits for the 3 preceding financial years. So permission to donate the charitable fund is required in general meeting. In general meeting, through the from the members it is required. Otherwise they can be paid through the board of directors meeting. But if aggregate amount of donation is exceeding what percent of net profits, then it will be required to take the shareholders approval, right, in the general meeting. So 3%, 5%, 8% or 10%, what should be the answer? Let me check, and yes, everyone is correct again. That would be 5%. Good, everyone. ठीक है. Okay, really good. Okay, now we will have a short break after 50th question, right? When the half session is done, we will have short break of 3 to 4 minutes, right? I'll tell you when the break will be happening, because this is the lengthy class. I can understand you all are tired. So we will have a short break of 3 to 4 minutes. Hi Sky, I remember you. Okay, so so we will have short break after 50th question. Don't worry, just maintain the flow, right? You need a little bit of rest na after 50th question, yes or no? You need that or not? You need a little rest of 3 to 4 minutes or not? A break of 3 to 4 minutes or not? If you don't want rest or break, I will continue till 100th question. Okay, question number 46. We will take the break, a short break after 50th question. The details of the investment of a company in shares in which company is beneficiary owners needs to be maintained in the register using form what? Tell me. The details of the investment of a company in shares in which company is a beneficial owner. This needs to be maintained in which form number? MBP1, MBP2, MBP3 or MBP4? So yes, yes, good. Everyone is correct. The answer would be MBP3. Not everyone, but yeah, few of you is correct. That is MBP3, not MBP4. It would be MBP3. Now, next question. NCLT was set up as the result of which committee? Justice V. Balakrishnan Irari Committee, Injeti Srinivasan Committee, Tapan Ray Committee, Mr. Gaungli Committee, M. Gaungli Committee. So what would be the correct answer? So with the recommendation of which committee NCLT was set up? You tell me the answer. A, B, C or D. It is very easy question, just a fact based question. And no, I haven't got any correct answers yet. Now I am getting the correct answers. Yes, it is Justice V. Balakrishnan Iradi Committee. Question number 48. Which of the following is the minimum qualification for a person to be appointed as the president of NCLT? We are talking about the president, not the judicial members. Minimum qualification: a judge of district court of 10 years, a judge of high court of 5 years, judge of high court of 10 years. Minimum, minimum. We are talking about minimum. Either one or two. What should be the answer here? You tell me what should be the answer. Very easy question. And yes, I have started to get the answers and everyone is correct again. That will be judge of high court of 5 years. Option number B is the correct answer. So a person who is or has been a judge of high court for 5 years, this is the minimum qualification that is required to be appointed as the president of the NCLT. Now the principal bench of NCLT is in where? The principal bench sit in Mumbai, in New Delhi, in Kolkata or in Chennai. Where do this principal bench of NCLT sit? Let me check the chat section, then I'll give you the answer. So the answer, I haven't got the answers. Yeah, I have started to get the answers, I guess. Yeah, 49. See, when you're giving the answer, write 49 as well, because I will not know then. Are you giving the answer of 48th question or 49th question? Write 49 the B, like that. Yeah, so the answer is yes, New Delhi. Very, very good. Question number 50. NCLT can amend its order within how many years from the date of order, provided appeal has not already been made to NCLAT. So NCLAT is appellate tribunal to the NCLT. So suppose NCLT has given its judgment on certain aspect, but it can amend its order, but within how many years it can do so? Within 1 year, or within 2 years, 3 years, or 4 years? What is the answer here? Let me check the chat section. And yes, again, everyone is correct. Only 3 answers I have got till now, and everyone is correct. Within 2 years. Yes, very, very good. Okay. Now, this is the underlying provision. Tribunal can amend any order within 2 years from the date of the order, but please remember, provided this has not been case has not been filed against the order of the NCLT to the NCLAT, then only the NCLT can amend its order. Okay, I'm giving you just 2-minute break. Okay, I'm giving you I'll write the time here. It is right now 1:34. At 1:37, that will be sufficient. At 1:37 we will meet again. I'm just giving you around 2 to 3 minutes break. ठीक है, पानी पी लो, and if you want to go to the washroom, do that, and we will meet at the 1:37 exact. I'll not wait for anyone. I'll just start exactly at 1:37. चलो. Back. Hello. So my voice is clear now. Everything is good. Chalo, we are good to go. Let's start from where we have left. Chalo. My voice is clear now. Everyone just confirm in the chat section. Everyone. है ना? Everything is good. Yes. Just confirm in the chat section, everyone, so that I can start. Yeah, everything is good. Chalo. Let's move ahead. Good. So we are in the 50th question. Now we have the 51 question number 51. Okay. It says a person shall not be eligible to be an auditor of the company if he has been convicted by a court of an offense involving fraud and a period of dash years has been elapsed from the date of such conviction. So what should be the answer here now? You should tell me. We have done this question previously as well. So how many years has not been elapsed and he is not eligible to be appointed as the auditor? 5 years, 7 years, 10 years or 12 years? What should be the answer? And yes, most of you are correct, not everyone, but yes, most of you are correct. That is 10 years should have been elapsed, right? So this is the underlying provision here. A person convicted by the court for a fraud or any other offense till 10 years from the date of conviction, he is not going to be appointed as the auditor. But 10 years, if 10 years has been passed, then he is allowed to get appointed as the auditor, right? Question number 52. In case of government company, CAG has the power to conduct supplementary audit, right? CAG has the power to do that. Controller and Auditor General of India. Within how many days of the receipt of the audit report, the supplementary audit shall be conducted by the CAG? So within 30 days or within 45 days, within 60 days or within 90 days. So within how many days? Within how many days the supplementary audit can be conducted? Let me check the chat section. And yes, again, in this question, everyone is correct. That is within 60 days. Very, very good, everyone. Okay. Now, this section talks about, section 143 talks about this. CAG can direct the auditor regarding the manner in which the audit is going to be happened, right? And CAG within 60 days from the receipt of the audit report can conduct the supplementary audit as well. And CAG can also conduct the test audit, right? Test audit means just selecting the random samples from the overall accounts book. Following is the list of some services, that is accounting and bookkeeping services, internal audit service, and you have this actuarial services, then you have the investment advisory service. So the question asks you, which of the following service cannot be provided by the auditor of the company? What should be the answer here? Which can't be provided? Auditing and bookkeeping services, internal audit, actuarial, or the investment advisory service? So let me check the chat section and I hope everyone would be correct here. Yes, again, everyone is correct. So option number D would be the correct. So all these services are not allowed to be offered by the auditor itself. So if any CA is providing any service regarding these points, then he is not allowed to be appointed as the auditor, right? And how do you remember this? You remember this through the technique of admin. A means accounting and bookkeeping service and your actual service. D is design of the financial information system within the company. M indicates your management service. I indicates your investment service and your internal audit, right? So these services are not to be allowed by the auditor. Okay. Question number 54. Who can conduct the audit of the company? Chartered accountant, company secretary, advocate, CMA, that is cost and management accountant. So what should be the answer here? Who is allowed to conduct the audit of the company? Very easy question. I hope everyone would be doing this correctly, and yes, as expected, everyone is correct here. So only chartered accountant is allowed to do the audit for the company, right? Okay, let's move to the 55th question of the day, that says a company is dealing in category B products. Now we are talking about category B products, the non-regulated categories such as turbojets, steel, coffee. So for these category B products, what is the turnover limit for which you should be doing the cost auditing, or what is the individual turnover limit of individual product or services for which you have to separately show the cost records? Is it 50 crore or 25 crore? For the non-regulated, 100 or 35 crores, 100 or 25, 50 or 50. What should be the answer here? Let me check. Very, very good. Now everyone is correct. So we have done this thing for the regulated entities or industries, but this is the question of unregulated, right? So the answer would be option number B, and everyone is correct. Very, very good. Okay, that's really nice. Okay, good everyone. Chalo. This we have discussed already, right? 56th question of the day, that says political contribution by the company cannot be made through which of the following means? Through NEFT. It can be made through NEFT. Account pay check, it can be made through account pay check. Account pay bank draft, it can be made through that as well. Bearer check, you are not allowed to do the donation from the bearer check. So option number D would be the correct answer here, because it is not allowed. So you can do the political contribution through all the rest of the means that we have discussed. So it shall not be made except by the account pay check. So account pay check is allowed to be drawn, or through account pay bank draft, or use of any electronic method like NEFT, RTGS, plus whatever method is suggested by the government as well. So now we have electoral bonds, right? So through electoral bonds as well, it is allowed, right? Okay. Now question number 57. If the contribution in the previous question, we have dealt in contribution made to the political parties. If it is made by cash, then what is the maximum fine on the company? Is it 2% of amount contributed, or is it 3% of the amount contributed, or is it 5 not percent but multiplication, 5 multiplied by the amount contributed, 10 multiplied by the amount contributed? What should be the answer? What should be the penalty, maximum fine of the company? Let me check the chat section, then I'll give you the answer. And yes, I have started to get the answers, and everyone is correct again. That is 5 times. Very, very good everyone. I'm proud of you all. That's really good. Okay. Now, so these are the penalty amounts. Let's understand this as well. The company shall be punishable with the fine which may extend up to 5 times of amount so contributed. This is the penalty on the company, but on the officer there would be penalty of 5 times and imprisonment for a term which may extend to 6 months. Okay. Now question number 58. The directors of the company shall disclose his interest in any company or association by giving a notice in the form. In which form he is going to disclose his interest? Interest means if he has purchased some securities of any other country, not any country, but of any other company. So if he wants to disclose that interest, right? So in which form he is going to do that? MBP 1, MBP 2, MBP 3 or MBP 4? Let me check the chat section, then I'll give you the answer. So for the question number 58, I have started to get the answers, and not everyone is correct. The answer is MBP 1 here, not the MBP 2. Please understand this. You are disclosing your interest in the company, and everyone is incorrect. I don't know why, but everyone is incorrect here. Okay. By giving a notice in the form of MBP 1, right? So in this case, the director is going to disclose the interest in the company in the form MBP 1, right? Now, when the company is going to disclose about his interest in other companies, so he can do so in the first board meeting after his appointment as the director. He's going to do that. And in the first meeting of board of directors each financial year also, he has to disclose his interest in other companies. After, whenever there is a change in the disclosure part, already made like increase in the shareholding, if he has increased if he has increased the shareholdings, right? Then also if there is any change in the disclosure that he has earlier done, if he has purchased some securities of any other company, earlier it was 3%, now it has been increased to 5%, so he is going to then and there disclose that in the form MBP 1. Understood, right? Okay. Now next question number 59. The notice of disclosure of interest given by the interest shall be preserved by the company. So same notice that we have discussed in the previous question, that will be preserved by the company for how many number of years? 3 years, 5 years, 7 years, 8 years, or 10 years. So tell me what should be the answer here. For how many number of years it should be preserved by the company? Let me check the chat section. Yeah, I have started to get the answers. And yes, everyone is. I haven't got enough answers. I'm not going to give you the answers. Yeah, now I'm getting the answer. Yes, everyone is correct. Now everyone is correct in this question. Good. So the answer is option number E, that is within for 10 years he has to the company has to preserve this document, right? So in the form MBP 1 he has to give this disclosure, and he has to the company has to preserve this. Just wait for a minute. Not the 10 years, huh? It is 8 years, huh? Okay. Acha. हाँ, everyone has given me the correct answer. हाँ, 8 years, huh? Okay, that was slip of tongue. That was 8 years. Yeah, that was 8 years. Everyone is correct, huh? No one is incorrect. I have told you everyone is correct. So that is 8 years. Yeah. So it should be preserved till 8 years. Good, everyone. Now the qualification of president. The qualification of president of NCLT is that he should have been judge of High Court for at least 5 years. So now we are talking about again the president, huh? He should have been judge of minimum qualification. It is asking you judge of High Court for at least 5 years. Is minimum qualification is this? Advocate of High Court for 10 years. Is minimum qualification is C, judge of Session Court for 7 years, judge of High Court for at least 7 years. So what should be the answer? What is the minimum qualification here? Yeah, everyone is correct. That is judge of High Court for at least 5 years. Very, very good. For 60, option number A. Okay, very good. I think in this, okay, yeah, everyone is correct in this. Good, very good. Now let's move to the next question. What is the qualification for judicial member now? Now the question is asking which of the following is not a qualification of the judicial member. A judge of High Court at present or in the past. This is the qualification. That is correct. But we are talking about not a qualification. District judge for at least 5 years could be appointed as the judicial member. Yes, it is also absolutely correct. Advocate of a court for a period of at least 10 years. He is also allowed to be the judicial member of NCLT. It is also correct. Public prosecutor for at least 7 years. So now let me check the chart section first of all, then I'll give you the answer. So yes, everyone is correct. For 61, option number D would be the correct answer. Very, very good, everyone. Yeah, very good. Now let's move to the these are the qualifications. So judge of High Court present or in the past, district judge for at least 5 years at present or in the past, advocate of a court for at least 10 years. Question number 62, NCLAT. Now we are talking about the appellate tribunal. NCLAT is the appellate tribunal for hearing orders passed by whom? NCLT under company law and section 61 of the IBC, that is Insolvency and Bankruptcy Code. So whatever are the cases under section 61, this NCLAT can hear the appeal against these orders or not. And for the NCLT, second option says in IBC under section 202 and 211 of the IBC. Third says CCI CCI cases under 53N of the Competition Act. Fourth option says all of the above. Let me check the chat section. Ki who all of you are correct here? Yeah, not everyone is correct here, but most of you are correct, but not everyone. Acha, no. First, viewer has given me the wrong answer, then he has given me the correct answer. Okay, now everyone is correct. Okay, that's good. So each of these cases can be handled by the NCLAT. If someone appeal against the order for these many cases, so it can be heard by the appellate tribunal. Very, very good, everyone. So NCLAT is the appellate tribunal for hearing appeal against the NCLT. That is very obvious. But apart from that, 202 section and 211 IBC is also allowed to be heard by the NCLAT. Apart from that, CCI cases under section 53N is also allowed to be heard by the NCLAT. And apart from that, some orders of the NFRA. Okay, question number 63. It says Stone Private Limited incorporated on 31st July 2016. Okay. Now, and the meeting of the board was held on 1st of October 2016. Now, you all know, we have discussed this thing, ki first board of meeting should be held within 30 days. But in this company, what is happening here? Incorporation date is 2016, but the company is having the first board of meeting on 1st of October. So it is clearly the violation of 173 section, right? So option number A, B, C or D, what should be the correct option? Let me check the chat section. And yes, everyone is correct. That's really good. Good, everyone. Option number D would be the correct answer. Acha, tell me the number of days, maximum number of days, maximum number of gaps that are required to have between two consecutive board meetings. Maximum number of gaps that we are allowed to have between two consecutive board meeting. Maximum number of gaps. Yeah, good. Siddharth is correct, but why Subhashini you are saying 30 days? Why you are saying 30 days? Acha, you are telling me the answer of this question. I am asking this question. How many number of days, maximum number of days are allowed between two board meetings? That is 120 days. Very good, everyone. Good. Okay. 64 question. Question number 64. The minimum number of independent directors in the case of public listed company. That is very easy. We have talked about this. 1/4 of total directors. Yeah, for OPC it is 90 days. Very good, Nilesh. 1/4 total directors, 1/3 of total directors, half of total directors, 2/3 of total directors. So what should be the answer here? And yes, again everyone is correct. 1/3 of total directors. Acha, tell me the limit. If suppose this is about the listed companies, but what is the limit of public companies in which they should have at least 2 independent directors? What is the limit for the paid up share capital, for the outstanding loans, and for the turnover? What is that limit? Give me that limit as well, everyone. For the paid up, for the outstanding loan, and for the turnover. I have given you the trick as well, huh? Don't disappoint me. What is that limit in which you have to appoint at least 2 independent directors? Everyone. Yeah, very, very good. Good, Snehal. Pratiksha is giving me this answer. Okay, very good. 10, how you are going to remember it? 10, 50 and 100 crores. Very good, everyone. 10, 50 and 100 crores. And this is also needed for audit committee. Please remember this thing. Right? Okay. So they should have at least 2 independent directors. If 1/3 is, if suppose there are total 3 directors, you can't appoint 1 independent directors, right? You would have to appoint 2 independent directors, right? Okay. Now, who among the following, question number 65, who among the following? Yeah, everyone is correct. I have seen everyone's answer. Everyone is correct. Don't worry. Chalo, let's move to the 65 question. Who among the following shall be eligible to be an independent director of a company XYZ Limited with paid up share capital of 100 crore. Now what should be the answer? Tell me what should be the answer here. Who among the following shall be eligible to be an independent director of the company with a paid up share capital of 100 crores? Mr. A, who is promoter of the subsidiary company. Mr. B, whose relative is holding security of shares of the company worth rupees 25 lakh. So there are few conditions. We are going to talk about that as well. Mr. C, whose relative has held the key managerial position and its associate company in the last year. Mr. D, who is the partner in the cost center. Even if you don't know this answer now, you can easily eliminate the option. Question is asking who shall be eligible. As you can clearly see here, Mr. A, who is the promoter of the subsidiary company, he is interested, so he will not be allowed. Let me check the chart section, then I'll give you the answer. Even if you don't know the exact answer, you can intelligently guess it. And yes, everyone is correct. Okay, you have already done that. That's really good. That's really good. Okay, so Mr. A, this would not be allowed. Mr. C, who is a relative, has held the KMP, so obviously he would not be allowed. Mr. D, who is the partner in the cost auditor, he would not be allowed. So Mr. B, whose relative holds shares worth rupees 25 lakh, he is allowed to be appointed as the independent director. So what are the limits? Let's talk about all the limits in detail. Okay, let's understand this very carefully. You have to remember all these limits. An independent director is the one who must be different from the managing director or whole-time director. He is not managing day-to-day business. He also possesses integrity and relevant expertise. Right? Now, understand the third point. It says he must not now or in the past promoter of the company or its holding subsidiary of the associate company. So if he is in the past is the promoter of holding subsidiary or associate company, he is not going to be appointed as the independent director, though he can be appointed as any other director, but not as the independent director. He must not be related to the promoter director in the company or its HSA company. Now, these are the conditions for the relatives. Please understand this because you have to remember these conditions. Holding any securities, if the relative is holding security which is more than 50 lakh or 2% of paid up capital, whichever is higher, then the person will not be allowed to be appointed as the independent directors. 50 lakh or 2% of paid up share capital, right? If his relative is indebted more than 50 lakh, again same limit, or for giving the guarantee, again the limit is 50 lakh. Doing any transaction including holding of securities or loans which is 2% or more of its income or gross turnover. If he's doing that, then also he's not allowed if his relative is doing that. But this should be followed not only for single financial year. It should be applicable for 2 immediately preceding financial year. Please understand, it is to be followed for immediately preceding 2 financial years. Okay, this you have to remember. Now, few other conditions says that independent directors or his relative should not have held any KMP. That is very obvious. Should not have been employees or partners of the legal consultancy firm like the cost accounting firm, like the chartered accountancy firm or the advocate firm in 3 preceding financial years. So for this should be followed for 3 preceding financial years. But for the relative, condition was for the 2 preceding financial year. This you have to remember. And should not hold 2% or more voting power. Again, then he will not be independent, right? Shall not be the CEO or director of any NPO which receives 25% of its receipts. So if a company is giving donation to any NPO, he should not be the CEO or director of this NPO. He can't be appointed as the independent director in the company. That is also the situation. Alright, so this you have to remember all these points. Anything could be asked in the examination, right? Okay. Question number 66. No independent director shall hold office for more than 2 consecutive terms, right? And this 2 consecutive term, after this some cooling period is there. But such independent directors shall be eligible for reappointment after the expiration of dash years of ceasing to become the independent director. So it is talking about the cooling off period 2, 3, 4 or 5. What should be the answer? Question number 66. I have started to get the answers and I can see not everyone is correct again. Okay, not everyone is correct, but few of you are correct. That is 3 years, but not everyone. Don't delete your messages, huh? No one is going to delete the messages. Don't delete it. Even if you are wrong, how does it really matter? You have to, if you type it wrong, then just correct it and type the correct answer. Don't delete that, because see, when you give the wrong answer, it retains in your mind. Then when you correct it, it will be helpful for you to retain this provision. It's called learning by doing. Don't delete it. Even if you have given the wrong answer, just correct it again by giving the correct answer. Okay, don't delete your chats. Okay, so that will be what? 3 years. Please understand the cooling off period is 3 years for the independent directors, right? For the auditor, chalo, let me ask you one more question. For the auditor, what is the cooling off period? For the auditor, for the independent director, it is 3 years. Everyone is correct. But for the auditor, what is the cooling off period? Nachiketa say, learning by deleting. Chalo, tell me, what is the cooling off period for the auditor? Everyone, why are you taking so much time? Yeah, okay, now I got the answer. That is 5 years. Okay, let's talk about the underlying provision now. So independent director could be appointed for 2 consecutive terms. That you know, each term could consist of 5 consecutive years, right? Then after 2 consecutive terms, there should be cooling off period of 3 years, right? Okay, and please understand this as well. Independent directors shall be eligible for reappointment after the first term on passing the special resolution. This also you have to remember, right? And the 3 years and the 2 terms and 1 term can be maximum of 5 years. This all you have to remember. Okay? And that provision as well. Number of independent directors 1/3, and for every public company, if paid up outstanding loan and your this turnover is 1050 and 100 crores respectively, then at least 2 independent directors. So all these provision you have to remember, right? Question number 67th. Every company shall file a notice to registrar stating the details about the appointment. Every company shall file a notice to the registrar stating the details about the appointment of auditor within 15 days of the meeting in which the auditor is appointed. The notice shall be in form number. In which form number it is? Okay, very easy question it is. You have to give the notice to the registrar. So whether 81 you will file or 82 or 83 or 84, which form you are going to file? Okay, so I have started to get the answers, and yes, everyone is correct. Very, very good. That is 81. Very good, everyone. Question number 68. Which of the following are disqualified to be appointed as the auditor of the company? Disqualified, we have seen this. Just give me the correct answer here. Officer or employee of the company? Yeah, he is disqualified. Any body corporate is also not allowed. Only partnership firm, or you can say LLP, limited liability partnership, is allowed, or individual chartered accountant is allowed, right? So this is also incorrect. This is also not allowed. A person who is a partner or employee of the officer or employee of the company. So let me check the chat session, then I'll give you the answer. So yes, everyone is correct. All of these are not allowed. So this is also not allowed, right? Very good, everyone. So we have talked about the disqualification. We are not going to repeat it, right? Question number 69th. An auditor who has resigned. Now we have talked about the 80 form of appointment, that is 81. An auditor who has resigned shall file a statement within how many days of his resignation to the ROC? Now you should be giving me the answer of days for the resignation. If he has resigned, he has to file the statement with the ROC. 10, 15, 30, 45. So what should be the answer? For the resignation, not for the appointment, right? So yeah, I have got the answers. And okay. Someone has given me the ADT form as well. Very good. Everyone is correct. 30 days is the correct answer. Okay. Now, and the form number is also correct. Who has given me the form number? That is ADT 3. So for the appointment, you are using the ADT 1. But for the, if you are resigning it, you are going to fill the form of ADT 3. Right? Very good, everyone. Question number 70. Which of the following is true in the following statements? NCLAT is the appellate tribunal for hearing appeals against the orders passed by the insolvency and IBC under section 202 and 211. Which of the following is true? We are asking you, right? And second option says audit committee is responsible for charge of overseeing financial reporting and disclosure, such as the reviewing of the financial statements, evaluating the auditors of the company. Audit committee is responsible for that. You have to tell me it is correct or not, right? Third option says audit committee is responsible for appointment of director. So you have to tell me which are the correct options. So only one, only two, both 1 and 2, none of the above, all of the above. So let me check the chart section, then I'll give you the answer which of the following statement is correct. So yes, everyone is not everyone. Okay, few of you are incorrect, but most of you are correct. 1 and 2 is absolutely correct. NCLAT is allowed to hear the appeal against the IBC section 202 and section 211. And yes, audit committee is responsible for the reviewing of financial statements, but audit committee is not responsible for the appointment of directors. All right? Yeah, very good. Next question. Yeah, this question we have done. Question number 71. In case of government company, auditor other than the first auditor shall be appointed at the annual general meeting. In case of government company we are talking about, and other than the first auditor, we are going to talk about the underlying provision as well, don't worry. So this auditor is appointed at the annual general meeting within 180 days from the commencement of financial year, within 90 days from the closure of financial year, any time before the annual general meeting. So what should be the answer here? You should tell me the answer. Okay. So let me check. Yes, everyone is correct. The answer would be within 180 days from the commencement of the financial year. Very, very good, everyone. So let's talk about the auditors for the government company and for the non-government company as well. So when you do subsequent auditors appointment, what is the subsequent auditors appointment? You know, other than the first company, you have subsequent auditors. So for that, when you appoint these auditors in the company other than the government company, this shall be appointed in the AGM, that is annual general meeting, right? And he is going to hold the office. See, first auditor is getting appointed within 30 days in the board meetings, and he is going to hold the office till first AGM. But after that, all the auditors, we call it subsequent auditors. So this is going to be appointed in the first AGM, and he is going to hold the office for 5 years from first AGM, from the conclusion of first AGM till the conclusion of the 6th AGM, that is for 5 years. But in case of government company, CAG is going to appoint the auditor within 180 days from the commencement of the financial year, and he is going to hold the office till conclusion of the AGM in the government company, not in the regular companies. In the government company, he is only going to hold the office for the next AGM, not till the 6th AGM. Please remember this, right? Understood? Okay. In case of subsequent auditors appointed after the first auditor, remuneration is going to be fixed by or in. We are talking about right now non-government companies, right? So in case of subsequent auditors other than the first auditor, so first auditor is getting appointed by the board of directors, so remuneration is going to be set by the board of directors. But in this question we are talking about subsequent auditor, and subsequent auditors are getting appointed in the annual general meeting. So very obviously, it is very obvious that the remuneration is going to be handled by what, by whom, or by it is going to be fixed in general meeting itself. So let me check the chat section, and yes, everyone is correct again. That is general meeting. Yeah, very good. Let's move ahead with the 73rd question. Okay. Which of the following is the disqualification of the auditor as per the guidelines issued by ICI? Okay, this is not very important question, but you have to tell me what is the guidelines issued by the ICI for the disqualification. A person has not attained the age of 21 years. What is the disqualification? A person of unsound mind, or an undischarged insolvent and convicted by the court for any offense. So all of these are the disqualification as per the ICI. So all of the above would be the correct answer, option number D. And yes, I can see everyone is correct again. Question number 74. It says, as per section 124 of Companies Act 2013, the company shall, within a period of dash days of making any transfer to the unpaid dividend account. So you have transferred the amount in the unpaid dividend account within 7 days, right? But after transferring it, within how many days you have to prepare the statement which is going to contain the names of all the people who haven't claimed their dividend, and you have to show it on the website. So within how many days you have to do that? So within 30 days, within 90 days, within 60 days, or within 100 days? Tell me what should be the answer here. Let me check the chat section, then I'll give you the answer. And yes, official gaming shield, you are saying 30. I don't, acha, you have again deleted it. Don't delete it, Baba. Why everyone is deleting? Don't delete your chats. Okay, see, listen to me very carefully. Even if you are giving wrong answer, just write the correct answer afterwards. Now don't delete it. Okay, so 30 days, 90 days, 60 days, 100 days. So the answer would be what? That would be 90 days. And yes, most of you are correct. Acha, let's revise all the underlying provisions, because this is important. I have given you this answer so many times. Yes, now he is correct. See, within 7 days from the expiry of the 30th day, company has to transfer it to the unpaid dividend account. And if the company didn't transfer it, they have to pay the interest at the rate of 12% per annum. But after transferring it, within 90 days, they have to prepare the statement, and they have to show this in their official website, so that any shareholders who sees his name in the website, he can claim his dividend, right? Okay. And if dividend is not paid by the company within 30 days, so the amount of interest will be 18%. Okay. Question number 75. Which of the following is true? As per section 149 of the Companies Act, every company shall have minimum number of 2 directors in case of public company. So you have to tell me the true statements. All right. Second, no individual who has already been allotted a den under section 154 shall apply for or obtain or possesses another den. Statement number 3 says every company can maximum of 20 directors. Okay, now you have to tell me which of the following statement is correct here. Only one, only two, both 1 and 2, and none of the above. Let me check the chat section, then I'll give you the answer. You have to identify the correct statement, right? Okay. So, you have to give me the true statement. Why I'm looking at all the incorrect answers here? I'm asking you which of the following statement is true. I haven't got. Is there any problem with my chat section or what? I don't know why you're giving the wrong answer for this question. And if one person had said yes, if one person has said C option, everyone is giving C option only. Use your mind, na. as per section 149 of the Companies Act, every company shall have minimum of 2 directors in case of public company. No, minimum directors required is 3 in case of public company. In case of private company, minimum directors are 2. भाई कहाँ से सही हो गया है? This is wrong. Second option is correct, absolutely. Third option, so you know कि maximum number is 15, not the 20. So this is also incorrect. If one says C option, everyone is saying C option. Don't do like that. Use your own mind as well, na? Okay, chalo, let's move ahead. Question number 76. XYZ is a Section 8 company. State which of the following statement is correct. You have to now identify again the correct statement. No should be wrong here. Subhashin is saying a company can have only one director. In case of OPC, in case of OPC, they can have one director only, right? But not in the case of a public company or private company. Huh? Subhashini, please understand this. Okay? Okay. Now, question number 76. It shall hold at least one board meeting in every 6 calendar months. Section 8 company. We are talking about the correct statements. The maximum gap between 2 board meetings, maximum gap shall be not more than 120 days. And the first meeting shall be held within 30 days of incorporation. Fourth option says all of the above. You tell me what should be the answer here. Yes. Now good. Now. Yeah. Good. Now in this question, everyone is correct. Very, very good. Chalo. Now I am glad to see this. Okay, option number A would be the correct answer because Section 8 company is not required to hold the first meeting within 30 days. So this doesn't hold true for that. And maximum gap? No. Maximum gap is not for the Section 8 company. Right? Okay. Everyone is correct and good. Chalo. Let's move ahead. Question number 77. In normal cases, what is the minimum day notice that must be given for calling a board meeting? In normal cases, what is the minimum day notice that should be given? Notice for the board meeting. 7 days minimum, minimum in the normal case, not in the exception case. In the exception case, you can call the board meeting within 2 to 3 days also. But in the normal case scenario, 7 days, 15 days, 21, 30 days is very easy. And yes, I have got the correct answers from everyone. Very, very good. Now everyone is correct. That is 7 days. Okay. Let's move ahead with the 78th question. Which of the following matters can be discussed through the meeting held by electronic means? Approval of prospectus, approval of financial statements, appointment of alternate director, approval of amalgamation of the company with another company, all of the above. What should be the answer here? You tell me the answer. In the 78th question, considering the quorum, how can we discuss all these matters? Can we discuss all these matters, or if any specific matter is there, I should take it? What should be the answer here? For 78th, yes, again everyone is correct. All the matters are allowed for the purpose of quorum now through the electronic means. Very, very good. Question number 79th. It says, if any default is made in transferring the amount to unpaid dividend account, we have seen this. Don't be wrong here. Any default is getting is being done in transferring the amount within 7 days, right? From the expiry of 30 days, the company is going to pay the interest within at the rate of how much percent of from the date of such default. It should be 10, 12, 15 or 18. Don't be wrong here. We have discussed this so many times. You can eliminate 10 and 15, I know. Give me the answer between 12 and 18. Okay? And yes. Now everyone is correct. Very, very good. Chalo. Now I'm happy to see this. You know the difference when it is 12 and when it is 18. Very good. So dividend is the important part. When within 30 days company is not paying dividend, the company's company will be imposed with more rate as the fine. More interest is going to be imposed to the company, more rate of interest. So that will be 18%, right? Okay. And in this case, it will be 12% in case of this transferring in default, if the company is having a default in transferring the amount, right, within 7 days. Okay. Now, question number 80. ABC Limited is the subsidiary of XYZ Limited. State which of the following statement is not necessarily true. Not necessarily true. That is the minimum eligibility. Not necessarily true. ठीक है. ABC is a subsidiary of XYZ. Is it necessary? XYZ holds 60%. Okay. If XYZ holding 60% voting power in ABC, right? Then is it correct or not? If XYZ controls the composition of board of directors, right, then you can call the XYZ the holding company. So this statement is correct or not? This statement is correct or not? You have to tell me. PQR are 100% of subsidiary of XYZ holds 75% voting power in ABC, that is in the subsidiary. So that can also happen, right? D option says all the director of XYZ, that is of the holding company, all the directors of holding company shall be the directors in ABC. No, it is not necessary. Shall be, it is written shall be. It is not necessary that all the directors shall be in the board of directors of XY of ABC. It is not necessary. So the correct answer would be option number D. Let me check. Yes, everyone is correct. Very, very good. I am proud of you all. Good, 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 everyone. Good. Chalo. Let's move ahead. Okay. Question number 81. Kahan gaya? This is the question. As per section 186 of the Companies Act, a company shall not make investment through more than dash layers of the investment company. See, what are these layers? You have invested in a company, it has some subsidiary company, and it is again investing in this company. Again, you have this company is investing in some other subsidiary company. So this is called layers. So as per section 186, a company shall not make any investment through more than how many layers of the investment company? 1, 2, 3 or 4. Let me check the chat section. And yes, again everyone is correct. Okay, that's really good. Okay, good. Everyone is correct. That is 2. Okay, very, very good. Okay, very good. Now, question number 82. A company wants to purchase shares of other body corporate. It has paid share capital worth rupees 10 crores and security premium account is having 2 crores. Okay, same section is applied here, huh? The previous section 186, I guess it is 186. Yeah, so free reserves is worth rupees 3 crores. So total of security premium and free reserve is 5 crores, right? What is the maximum amount he can use for such acquisition? Okay, you have to tell me the maximum amount he can use. So sum of security premium reserve, free reserve is 5 crore plus when you add it to the paid up share capital, it is 15 crores. So let's look at the provision, underlying provision, then we will get back to the question. So underlying provision says कि a company can't invest exceeding 60% of the paid up share capital, free reserve and security premium, and we have calculated this, the sum of paid up share capital, free reserve and security premium to be 15 crores, and the 60% of 15 crore is how much? That is 9 crore. Okay, that you can calculate on your own, na? 50% is 7.5 and 10 and your yeah, then rest is 10%. 10% is 1.5 crore, so it would be 9 crore. So 60% is 9 crore. Now further this provision says or 100% of its free reserve and security premium, and sum of free reserve and security premium was 5 crores. 100% is 5 crore, whichever is higher. So you can't exceed 9 crore. So the option would be option number B. Let me check the chat section ki who all of you have given me the correct answer here. ठीक है, 60%, just remember the 60% clause and the 100%. ठीक है, let me check. And okay, that's really good. Okay, I can see everyone has given me the correct answer. Okay, very good, very good. Okay, chalo, you have done the calculation on your own. Okay, that's good. Chalo, let's move ahead. Question number 83. If company wants to exceed the limit that we have prescribed in the previous question, right, then it needs to pass what? It needs to pass a board resolution, or it needs to pass the ordinary resolution, or it needs to pass the special resolution, or it needs to amend its AOA, that is the article of association. Very easy question. So you have to give me the answer A, B, C, D for question number 83. Let me check the chat section. And yes, everyone is correct. Very good. Okay, good. So now you know special resolution must be passed. Everyone is correct. Okay, good. Question number 84. Investment company would have acquisition of shares, debentures, or other securities as its principal business. Oh, so it is saying कि investment company is investing in debentures, other securities, and we will call this company as the investment company only when its principal business is to invest in other companies' securities. But certain limit is there. That limit is what? In the form of investment in share, debentures, or other securities constitute not less than -% of its total asset or income derived from the business constitutes not less than dash as proportion of its gross income. So from total asset, what is their percentage? Minimum percentage, so that we can call this company as the investment company. And out of gross income, what should be the minimum percentage or proportion that we can call this the investment company? You tell me. The options are 50-50, 51-51, 75-50, 50-75. So let me check the chat section, then I'll give you the answer. Huh? Okay, I have got the answers. Yeah. Okay. I'm really glad to say this in this question everyone is correct. No one is incorrect, because I am looking at each and every chart, huh? And no one is incorrect here. Okay. One guy is incorrect. Okay, don't worry if you don't know this. One guy is incorrect. Other than that, everyone is incorrect. That will be 50-50%. Okay. Now, so investment company means any company whose principal business is to invest in other company, is to acquire the shares and debentures of the other companies. But it requires some condition. It should not be less than 50% total asset size. Out of total asset, this investment should not be less than 50%, and out of total income, whatever income you are deriving out of these investment should not be less than 50%. These are the criteria, right? Okay. Now, 85th question. Every company giving loan or giving a guarantee or providing security or making the investment under the previous section shall keep a register or entries in the register, and entries in the register shall be made chronologically and within how many days of doing such transaction. So if any transaction is being done by the company, they have to maintain the register. But after doing the transaction, within how many days you have to enter that into your register? This question is asking this thing. Within 5 days, 7 days, 10 days, 15 days. Tell me what should be the answer here. And it is very easy question. Let me check the chat section, then I'll give you the answer. Okay, I have started to get the answers. Okay, I'm waiting for each and every answer. Yes. Whoever has given me the answers, though I haven't received too many answers in this question, but yes, whoever has given me the answer, they are correct. That is 7 days. That is 7 days. Very good. And same, what will be the form of the register when you have done the this investment, you have to prepare the register, na? But in which format you are going to prepare that? MBP1, MBP2, MBP3 or MBP4 when you are doing the investments. So what should be the answer here? Let me check the chat section. Okay, I haven't got the answers yet. I am still waiting. The form of the register will be prepared in the section 186 would be what? Okay. Now I have started to get the answers, and yes, MBP2 would be the correct answer. Very good. Now, within 7 days and in the format of MBP2, which of the following shall not be a related party of the director, stepmother of the director? Which of the following shall not be? It is asking not be. Stepmother of the director, brother-in-law of the director, and spouse of the daughter of the director, stepsister of the director. Okay, so it is asking which is not. So let me check the chat section, then I'll give you the answer. Okay. So yes, brother-in-law of the director would not be counted as the related party of the director. Very good, everyone. Okay. Now, question number 88. The transactions such as sale, purchase or supply of any goods or materials directly or through agent amounting to 15% of the turnover of the company. If you are doing any transaction such as sale, purchase or supply of any goods, either you are doing it directly or through agent, but if it exceeds 15% of the turnover, or even if it doesn't exceeding 15%, if it amounts to 15% of the turnover, then the company shall be approving this transaction. Where? Through the resolution in board of directors meeting, through resolution in the general meeting, through authorization in the AOA, through consent of 100% of the shareholders. What should be the correct answer here? Let me check the chat section, and yes, I have started to get the answers and everyone is correct again. Really good. Okay, so option number B would be the correct answer here. Very, very good. Okay. Resolution is a general meeting. So let's look at the underlying provision here. So whenever the transaction is such that it exceeds 10% of the turnover, it exceeds 10% of the turnover, it would be approved. It would be approved in the AGM. If it exceeds or equal to 10%, if it is less than 10%, then it will be approved in the BOD itself. But if it exceeds 10% or it is equal to 10%, it will be approved in the AGM. Similarly, if you are selling something or disposing or buying any property, again the limit is same. If it is greater than or equal to 10%, it will be approved in the AGM. Similarly, is the case for leasing of property, same conditions. Similar is the case for rendering of services. Now this thing is something different. And this, what it is saying in the fourth part, in the fourth point, it is something different. It is saying, suppose any related party appointment you have done to your office, right? And when you have done so, and such related parties appointment to any office or place of profit in the company, or you are doing it in a subsidiary or associate company, and if you are paying that related party the monthly remuneration of less than or equal to 2.5 lakh per month, it is not per annum, it is per month. If you are paying the salary to a relative that is equal to or less than 2.5 lakh per month, then only resolution in the board of directors meeting will be sufficient. But if you are paying the remuneration or salary, total remuneration, not only the salary, if you are paying the remuneration more than 2.5 lakh, then approval of shareholder will be needed in the general meeting. Correct? Let's look at the last point here. Underwriting the subscription of any securities. So if you are hiring any broker or investment banker, and if you are doing, if you are issuing your shares through underwriting process, then whatever remuneration you are paying to the underwriters for underwriting, if it is less than or equal to 1% of the net worth of the company, less than or equal to 1%, okay, then board of directors meeting will be sufficient. But if it is greater than 1%, then resolution would be passed in the general meeting. Okay, got it? Question number 89. For certain related party transaction, Shareholders approval is required. We have done so in the previous slide for certain related party transaction. For others, the approval of board of directors is sufficient. We have just now seen that. If the company pays underwriting remuneration to the related party without the approval of the shareholders, that means it can be allowed through the board of directors as well. What is the maximum remuneration that can be paid in terms of percentage? One maximum percentage, less than or equal to this. Okay, in the previous case we have discussed that, don't get wrong here. 1% of net worth of the company, 2% of paid up capital, 1% of paid up capital, 1% of paid up capital plus free reserve. Let me check the chart section, and yes, everyone is correct. Very, very good. So in the previous slide we have done this thing, right? Same thing. This is this last point, right? So equal to or less than 1% is allowed through BOD only, right? Question number 90. In the previous question, if the amount is paid to the wife of the director, the remuneration, who is employed in the associate company, what shall be the maximum remuneration cap, assuming shareholders approval is not taken? So again, board of directors will be sufficient. In which case, what is the maximum remuneration cap here? 1 lakh per month, 1.5 lakh, 2 lakh per month, or 2.5 lakh. This also we have done, and option number D is absolutely correct, and I hope everyone would be correct here. Okay, 2.5 lakh. This we have already seen in the explanation. This was the same explanation, right? Everyone is correct. Question number 91. Voting power in respect of shares with differential voting rights of a company shall not exceed dash of total voting power, including voting power in respect of total shares. So voting power should not exceed which percent in case of differential voting rights? It should not exceed which percent of the total voting power? 26%, 74, 50 and 51. I think it's repeated question, so I think everyone would be correct here. So it's just kind of a revision for you, right? 74%. Okay, let's move to the question number 92. So tell me one thing, do you want me to take the marathon of commerce and accountancy and costing as well, na? Do you want this or not? The commerce and accountancy, again, we can have 100 question, and for the costing as well, we will have 100 question. So do you want me to decrease the number of question, or 100 questions are you have the ability to cover the 100 questions, or you want me to decrease the number of questions in commerce and accountancy or in costing? Is it fine, na, in the commerce and accountancy and costing? Tell me, everyone. I want everyone to answer this question. Do you want me to decrease the number of questions in commerce and accountancy and costing? Okay, now I'm getting the answers. So you are saying yes, 100 questions, or I should increase it. Should I increase it as well? Chalo. So tomorrow we are going to have this commerce and accountancy class, I guess. I haven't prepared the PPT yet, but I'll prepare that. So I'll be okay. Yeah. I'll increase it if possible. So we will be having this commerce and accountancy class tomorrow, and day after tomorrow we will have the costing class as well. Okay. Costing also we will be having the costing class as well day after tomorrow, right? Chalo, give me the answer to this question. I have got the opinion from all of you regarding commerce and accountancy and costing. Okay, chalo, give me the answer of this question. So timing will be same, 12 p.m. tomorrow, and day after tomorrow also 12 p.m. for commerce and accountancy and costing. 92nd question. The amount transferred to DRR shall be dash % of the value of outstanding debenture. Very easy question. Is it 10%, 15%, 20% or 25%? What should be the answer in the case of 92nd question? Yeah, Subhashini, this will be posted by the support department. I don't post anything in the Telegram, na. If I post also, if I teach also, if I make the PPT also, how will I get the time? So my work is to teach. I'm not going to post anything in the course or in the Telegram channel. That is, we have separate department for that, and that will be posted definitely by the support department, right? Don't worry about the PDF. It will be posted to you, right? Okay, tell me the answer to this question. And yes, I have started to get the answers. Yeah, 10% is the correct answer. Yes, very good. Now, I want to ask you one more question here, one additional question. What is the limit of transferring the fund in debenture redemption fund? So we have two things, please understand this. We have something called DRR, that is debenture redemption reserve. We have one more thing called debenture redemption fund. What is the limit for debenture redemption fund? Can you tell me that? 10% is the limit for the DRR. What is the limit for debenture redemption fund? And the answer is among the options that are given to you: 10%, 15%, 20%, 25%. Can anyone tell me that? I think I have got the answers before. No. Give me the answer. Yeah, Vishnu has somewhat given me. Yeah, good. So that is 15%. So for the fund, it is 15%. Right? Okay. Now, why you're saying no limit? Is there any amendment of that? Because as far as I know, the limit is 15% for the debenture redemption fund. So you have to set aside some amount to basically invest in certain kind of fund, right? So till 2023, it was 15% only. So if after that, if any amendment is there, because two people are saying no limit, are you sure there is no limit after 2023? Is there any amendment for that limit? Are you sure? Nilesh and Padmini is saying me, said there is no limit. Okay, just check it out. If it is, just write in the comment section, right? Okay. Now we have done the DRR 10% and the DRF. Question number 93. Debenture in case of infrastructure companies can be issued for a maximum period of how many years? Very easy question. In the case of debentures, in case of infrastructure companies, not in the case of normal companies, what is the maximum period? 10, 15, 20, 30. Okay. Padmini saying SEBI has prescribed that. If SEBI has prescribed that, that would be applicable. Then no limit would be applicable. Okay? If SEBI has prescribed that. Okay. So give me the answer of this question. 93 question. Can be a maximum period of how many years? 10 years, 15 years, 20 years, 30 years. So yes, everyone is correct again. That is your 30 years, and each and every one of you is correct. Very good, very good, very good, very good. Good. And for the normal case scenario, it is 10 years. Okay, for the debentures. So for normal case scenario, it is 10 years, but for the infrastructure company, it is 30 years, but for the normal case, it is 10 years, right? Okay, very good. Question number 94. In case of public company, if company refuses to register the transfer of securities within 30 days, the company has refused to register the transfer from the date of delivery of the instrument of the transfer to the company, the transferee is going to make appeal to the tribunal within how many days if the notice is sent by the company. So if notice of rejection is sent by the company, you have different number of days. If notice is not sent by the company, you have different number of days. So in case notice of rejection has been sent by the company, within how many days transferee is going to appeal, or he can appeal to the tribunal? Within 30 days from the date of receipt of the notice, from the a period of 60 days, a period of 90 days, a period of 120 days. So what should be the answer here? Tell me. Oh. So for 94th question, if notice has been sent by the company, yes, that will be 60 days. And if notice is not sent by the company, then the number of days is 90. But in this question, it is asking if notice is sent by the company. So the option number B would be the correct answer. Okay, 60. Very good. Vishnu has given me the answer of 90 days as well. And also the Nilesh has also given me the answer of when notice is not sent by the company. Very good. Okay. So in case of public company, transferee can appeal to the tribunal within 60 days if notice is sent by the company, if not within 90 days. Yes, you have to remember these two days. 95, question number 95. An offer or invitation to subscribe securities under private placement shall be made to person more than dash in aggregate in financial year. So offer or invitation to subscribe in case of private placement, section 42. Yeah. So in case of section 42, it is saying what is the aggregate number? Is it 50, 100, 150 or 200? Just let me know in the chat section, everyone. In the financial year, tell me now. I haven't got the correct answers yet. Now, okay. I have got. So few are incorrect here, but few are incorrect as well. So the option 200 is correct now. Option 200. Please understand this language. An offer or invitation to subscribe securities. It is 200 under private placement. Okay? Not the 50. Please understand the language. Huh? Okay, now. So this SEBI has prescribed this 200 limit, and this would be the limit. Which of the following statement is false? Private placement offer right can be renounced by the, you have to tell me which is false. Private placement of offer, section 42 again, the same section, can be renounced. Renounce means you can transfer the share, the right to purchase the shares. You can renounce it, and you can transfer this right to someone else in case of private issue. So you have to tell me the false options. Subscription money cannot be paid in cash in case of private placement. A company shall not utilize the monies raised through the private placement unless the allotment is made and the return of allotment is filed with the registrar. The company shall record the names and address of the person to whom such private placement is done in the form of PAS 5. So you have to tell me which of the following is false. Let me check the chat section. Yeah, everyone is correct again. Option number A would be the correct answer. It can't be renounced. Question number 97. Let's talk about that. The company shall allot its securities within dash days of the receipt of application in case of private placement. So very easy question. In case of private placement, section 42, within 15 days, within 30 days, within 60 days, or within 90 days. So this is easy question. So I'm not checking the. Let me check the chat section as well. It is 60 days in case of private placement, right? The company shall allot securities within 60 days of the receipt of application money. Now, in the case of private placement, it is. But in case of, this is the detailed part of it. So as you can see, receipt of application money is there. The company has to allot the security within 60 days. Now, also you have to understand, if the company has not allotted the shares, then what is going to happen? If allotment not done, company has to refund the application money within 15 days from this expiry of 60 days. Okay? And if company fails to refund the money, interest will be 18% per annum starting from the expiry of this 60th day. You have to remember all these points. 60 days, 15 days to be refunded, and the rate is 12%. Okay? In case of private placement. If the company fails to refund the money within a specified period, that is within 15 days, the interest of dash shall be applicable. This also we have discussed right now. So I hope everyone would be correct here. Very easy question. 10%, 12%, 15% or 18%. So what should be the answer here? Let me check the chat section. Is it 10, 12, 15 or 18? Just now we have discussed that thing, right? No, I haven't got any answers yet for the 98th question. Just write 98th dot or 98th. I think my chat section is not working or what? Okay, now I'm getting the answers. Okay. Right. So it is, it is 12%. Everyone is correct. Now, we have some other provisions as well. If a company makes an offer or accept monies in contravention of the section, the promoters, the company and the directors will be liable for the penalty, and penalty will be lower of what? Whatever amount you have raised, or 2 crore, whichever is lower. So you have to remember this data as well. Okay, 2 crores or amount raised, whichever is lower. Question number 99. Return of allotment in case of private placement shall be in the form of what? It is in the form of PS1, PS2, PS3 or PS4. A return of allotment we are talking about. So tell me the chat section what should be the answer. In case of private placement, you are filing some return of the allotment now. When you have allotted it, you're going to file the return of allotment. So in this, in which form number you are going to do that? Okay, for the 99th question, I haven't got the answer. Okay, I haven't got the answers. Yes, now I'm getting the answers, and yes, everyone is correct. That is PAS3. In this form, we have to give the return of allotment. Under section 42, again same section, return of allotment. So we are filing it in PS3, but within how many days we have to file this? Within 15, 30, 60 or 90 days. Within how many days we have to file this? Just tell me the answer in the chat section. 15, 30, 60 or 90 days. The last question of the day, I think. Let's see who all of you will be correct here. I am waiting for your answers. 15, 30, 60, 90. Within how many days? Return of allotment in the PAS that we have discussed in the PS3. We have to do that. And yes, I have started to get the answers. And yes, everyone is correct. In the private, it is 15 days. Some exception. Okay, now that's it. We have completed our lecture. Have you enjoyed the class? Just do let me know in the comment section after the video is ended. And now we are going to meet tomorrow. Okay, I have to take one more class at 6 PM for the paid batch. So I'm not going to talk too much here because I have to prepare the PPT for that as well, right? So I'm signing off. Just let me know in the comment section ki have you enjoyed the class or not, and we will meet tomorrow same time 12 PM, right? And day after tomorrow as well. Okay, I'm signing off. Thank you everyone, and we will meet tomorrow.